they told me that website will be live on Thursday, but I'm still waiting. So they need a lot of things to fix and deploy a couple of stuff on the website. But I hope this week we will be live, and we will start also different campaigns to bring more users. I mean, with the web traffic, any other kind of ads. By the way, what you see on the performance right now, so when we launch it, we put a small lot size to collect more market data. So I need to check if we increased it already or we will do it today. And we will print more. So, but basically what we did in the past, it was between 12 to 15% per a month. I can let me find the old link for where
And
is
you
it?
can pull up the charts too if you want to show us something specifically.
I, I
But
I'm from I don't know how to do it because I'm from the phone.
oh, you're on your phone. Yeah, it's not gonna work.
Yeah,
It's all
yeah,
good.
yeah.
You can send us links though. We can pull it up.
Yeah, sure. I'll send in the chat.
And for those that aren't aware,
Just
when you say smaller lot size, you basically just mean your sizing's been smaller as you test out some new strategies, basically, correct?
yeah, no, we are relaunching it because we faced some issues with the Bybit where users were small deposit. They can't reach same value size, proportional value size for our value. So, and when we get around like 12-15% per month, they did around 5 or something like that. So we relaunch it. We also add some more automations to the algorithm, and our minimal size right now is around $3,000 maybe. Yeah. Uh, but we, yeah, uh, in the December, I'm testing right now another copy trading vault with a small size. So I want to, uh, like in a couple of weeks, we'll introduce one more vault, and every user can deposit small size. So it will be for users who are with, I don't know, $100 to $10K, so they can join. Um, where is our chat? Just a second.
There's a private
Yeah,
chat down there.
here. Yeah.
And real
I
quick,
sent
maybe
it.
Winch, before we even get too far ahead of ourselves here, we got 1,200 people that have tuned into this. So maybe just give an elevator pitch on what Algo is or Algon is before we just really jump into it. Short and
Oh,
sweet.
sure. So, what is it algorithm effect? So, we are a trading algorithm. We are operates on forex. In less than 3 years, we did for today our first deposit, our first account sits around $240,000, and we started with 10K. So it's basically it's 24x in less than 3 years. Um, yeah, and this is what we're doing, like so. It's trading algorithm, and we are bringing for our copy traders. We're also working on chain walls because we have a lot of users like our holders or any different clients who are from UK or US and they don't have access to it, but they want to deposit, they want to use our product. So we are now developing uh, on chain walls. We are testing right now our algorithm on Lighter, on Ostium, and on Avantis. But I hope in the future, Trade XYZ or Hyperliquid will add Forex, and we'll just open the vault on Hyperliquid.
Sweet. Are you guys adjusting your strategy as you go, or has this been the same strategy you used for the last 3 years that garnered your personal account 25x gains?
Yeah, so it's a little bit it's the same algorithm. We did some changes. We added more automation, like auto stuff. For example, right now, if our deposit will grow, we don't need to scale a lot or change risk. It will be fully automated. So we're doing some changes, but the core algorithm is still the same because it's working and working very good. So we don't need to change it. If we will see something different, of course, we will change.
Cool. In other news, you guys announced a migration to Blank, which happens to fit the same lettering as Pump.fun. Have you guys thought about like a MetaDAO raise, or obviously you're migrating here? Tell us about these migration thoughts. You're leaving Believe, which is where you guys launched for, I would say, obvious reasons at this point. Maybe walk us through that.
Yeah, we will migrate. I can share where because we are talking with the Pump team, with Meteor team. I have a call with Soar too. We talk with MetaDAO, same. But for example, we can't migrate to MetaDAO because we need to relaunch it. I don't want to fuck up our holders who hold our tokens. So because or if we will have two tokens, it's like it's too
I
much
can't
to
do that.
do. I mean, uh, yeah, we're gonna migrate from Believe because I'm not aligned with their vision and what we are what they are doing, so I don't like it. And I still talking with our launchpad if some of them they can provide any value to us, so we will immigrate to them. If all the launch pads will be the same. We are just migrate to Meteora, like Clad did, kind of, and will be independent without any launch pad. Yeah.
Okay, so it's still up in the air. You guys are trying to figure out the best move.
Yeah, we know that we will migrate in the end of the month, because yeah, I'm talking with Belief team and still don't get like authority wallet, etc., etc. So they are sending me one message per 5 days. So, but I hope we will make it in this month and we will migrate. So it's not pretty complex to migrate. So
Okay, sweet. In other news, you're talking about Bybit. You guys just relaunched your Bybit vault. What happened the first time you launched it? Originally, you were saying you had to relaunch it because some users were not depositing enough to match your trade sizes, or help me understand that.
yeah, right. Because our trade size, because Vault on the Bybit is our treasury, right? And our size is a little bit bigger for small guys. For example, who deposited like $100 or 1,000, and Bybit should open trades proportionally to user's deposit. But if user has small amount of funds, so just there's not enough like leverage or liquidity to open same trade like proportional value, and they're just earning dust, right? So this one thing why we relaunch it, and next thing we like improved our algorithm. So and we just moved it to another page. So yeah, I also send you a link in our Telegram chat. This was a old vault. The metrics are still there, I think. Yes.
Okay, I'm pulling that up now. Here
Yeah,
you
you
go.
can open like 90 days stats maybe.
Yep, there
Yeah,
it is.
basically.
We'll zoom in there. Sweet. Yeah. So your 90-day stats, I mean, pretty much up only here. Looking good. You want to speak on those, or?
Yeah, this actually what our performance looks like, and our new vault is too young to bring same stats, but I hope in 1 month we will do same performance as here.
So over here on the new vault, you guys have an 89% win rate, which is incredible. On the old vault, you have a 72.72%. Do you expect the new vault to kind of even out a bit after you guys start deploying full size and
I
more
think
trades?
like we had same win rate like very big, around 90% when we launched it, but in the with time you still have some losses or something like that. So your win rate, our win rate in 3 years was around 72%. If I'm not, if yeah, like in the oldest one we have around 72 or a 69, something like that. But still we are like, you can also check the trades. So if you will scroll up, I don't see the no, yeah, I see trade. So you see, so we are opening like, for example, a grid of trades, so a couple of long positions, and we for algon effects close it. For example, we open it grid with the 6 positions, it will close 2 positions in a big profit and 4 in loss, but total P&L will be bigger than loss. So this is the strategy basically.
For example, here you can see it, right? So you got a bunch of Euro USD longs, or I guess you only trade EU, right? So you can
Yeah,
see a bunch of longs here around the same time. You take 2 smaller losses, you profit $1,300 here, and then you maybe take another loss here. So a couple small losses, but your larger one outweighs the remainder.
yeah. This is what we like. This is our strategy. So basically, we of course we are closing some positions with loss, but our overall P&L will be in profit. So every trade in profit, because thanks for a DCA and great feature that we implemented.
Can you talk a bit about the importance of opening up these vaults and creating multiple vaults? You were a top ranked vault on Bybit, if I remember that correctly,
Right,
correct?
right. We was top 3 in highest profits, highest followers profit. We was top 3. I think in 1-2 months we will be on the same spot with our new wallet, because already after the launch we already have like 320,000 assets under management in total. So it's the same amount that we had in our old wallet. Yeah. So I think we will catch the same top 3 or top 2, I guess. I hope.
So interestingly enough, you have 320K AUM right now, and your fully diluted value is 367K. How do you drive value back to the token? Because your assets under management almost directly correlate with your current market cap, and there should obviously be some premium on that if value is driving back to the token. Can you maybe explain that function for everyone listening?
Sure. So yeah, I'll start with utility of LG. First, like when we launched LG as an ICM for fundraising, and we collected fees and we did our treasury, right? But for now, what we are doing is, first, we are still doing buybacks. We stopped it for 1 month because we want to migrate, and we will continue to do buybacks from our profits. Second, when we will launch on chain wallets, we want to introduce token gated wallets. So it wallets with different risks and with different APY. Yeah, this is what we want to bring more utility for our token. So it will be all as right now buybacks, token gated wallets, and we will still keep the free wallets for everyone. And also we are going to launch after migration, we're going to launch our rewards, because when we're doing buybacks, we are keeping 50% of buybacks into our treasury, and other 50% are goes to reward pool for our holders. So we are basically redistributing value from our algorithm for our holders. But it's
So
not live yet, because yeah, after migration we will launch it together.
so that'll be like a staking feature. So half. So help me understand this. Half of the money you buy back will go into a vault. The other half will go into distribution for holders.
Yeah, so we are, for example, we did like you can see here, for example, master PNL, we did $50,000, right? Half of it, we are buying back our token. And
Okay.
splitting it 50-50. So 50 goes to our treasury, token treasury, and 50 goes to holder rewards.
Got you. Got you. We're coming in. We got like 5 more minutes for you here. Maybe we'll give you some time to just run through all the updates, everything you want to cover, what's new. This wasn't really meant to be a ALG interview. After all, it's more of an update segment. So maybe give us some updates, things you wanted to come on here and touch on, everything important, the future, etc.
So I'm still I can share something. So right now I have like a lot of calls with not with VCs, but more with private investors. I have like around 3 guys who I closed last week, and they will deposit like a pretty good size into our wallets. I have a revenue share from it, and I will put it back into our treasury. So it's basically what I'm doing now. I'm spreading the word about what we are building and doing with my network, and trying to bring more private clients. And some of them I'm trying to bring them into Puppet Trading Wall, but some of them want to, own their server, hold everything with them, like etc. etc. So I'm closing it, but still earning some fees, and I'll giving it back for our treasury.
So what's
Can
your
I
big
ask?
goal right now, Winch? Go ahead, Josh.
I wanted to actually just follow on from that. What kind of size do you think you
I'm
can
not here,
get
George.
from?
Yeah.
Oh, okay.
You
Interesting.
can't hear him, Winch?
No, I don't hear him.
Maybe Dom, just ask Winch about the size that they can get from private clients. You think, like, is it $10 million, $1 million, 100K, etc.?
So Winch, he's asking, he said, what kind of size does it look like to get from private clients? I'm sure that kind of fluctuates based on who you're talking about. But what kind of size can you get from private clients
Into the strategy.
and get that into your strategy?
So one of who I closed, he deposited 100,000 USD, and like biggest private client that I have, he has deposited 1.3 million euro. So this is like the biggest one, and I'm like running his algorithm, like I'm running his servers, like giving him Algon for 1.5 years, I think, yeah, something like that. So this pretty so. I'm working with private clients only with I don't know, we can start from 20K to I don't know, to 10 million, I think, yeah, because there is enough volume on forex and liquidity to also to handle the deposit with 10 million.
That's a nice thing about the FX markets. You can facilitate basically any size of money going in and out because it's not like these illiquid crypto markets. So what's the goal here? Is the goal right now for you, Winch, just to grow this AUM as much as possible? Obviously, more AUM equals more profits back into the company, which equals more buybacks, more holder distributions. Like, what is your current goal today?
So our current goal, so it was like 100% right, grow our AUM, because we will earn more and we will make more buybacks and more rewards for holders. Also, we'll start a good marketing after we'll grow our AUM. And next thing, what we really do and what we really need to do is on-chain wallets, because this will bring us a lot of attention and a lot of new holders, new deposits. So on-chain wallets will be pretty crazy tech. We are hard working on it.
And so all these deposits you get from Bybit, maybe other platforms, basically people can deposit whatever amount of money they want, and you get some sort of kickback, referral fee, whatever you want, based on the earnings they make that are going to go directly into buybacks.
Yeah, right. So for example, on the Bybit, we are getting our share is 15% from the profits. So it's basically around I don't know, 6 to 8,000 each month with current AUM. Yeah. So basically, what yeah, we will earn from the fees a lot, and we just want to exposure it, like make more wallets, like on-chain wallets. We also tomorrow I'm gonna start testing the new type of algorithms for a stock market. Yeah, we just want to grow our tools, like bring more algorithms, bring more wallets. I hope one day we will make something for BTC or Ethereum, like any kind of algorithm, but it's pretty hard with this volatility.
Have you guys started testing out any strategies for that yet, just on the back end?
We tested it back like 2 years ago. We tested with Bitcoin, but it was awful. Yeah, it was like one month it was like plus 50%, next month minus 30. It was like a roller coaster, but market changed a little bit, so we still want to improve and test again. Maybe we'll see something that we didn't saw in the past, and
closing thoughts. Why has the FX market been so much more predictable for long-term gains? Right, you've been doing this for almost 4 years now. Why does the FX market work so much better than something like crypto or indexes? Or you specifically trade Euro USD on the FX market. Why has that been the winner?
You can you open the chart Euro USD? You will see.
Yeah, absolutely. I'll pull it up right now.
It's always in the range. It's very heavy assets, so there is no manipulation or something with this market. Euro USD pair itself around $6 trillion dollars in volume every day, I guess, right?
Yeah, I mean, what the FX market does, at least 3 trillion a day in terms of volume. I'm not sure exactly what EU does, but yeah, trillions of dollars.
What we did, our total volume was 100. No, not 100. Yeah, 150 million. We did it in 3 months.
Dom, I have a question for Winch. If you can ask.
Question coming in from Josh here. Winch.
Just ask him about, like, we see like Solomon coming on later is doing a strategy to earn yield for stablecoins. Do they see similar protocols maybe working with them to generate yield for their protocols?
So we have Solomon Labs coming on here shortly after you. They're working with a bunch of protocols to generate yield for stablecoins. I think Josh's question is, do you guys see yourself working with similar protocols to generate yield? I'm not sure if I got that question right, Josh. Yeah.
To basically be a source of yield for their.
We can. So we also want to introduce in future DeFi strategies as well. So yeah, in the long future, maybe in 1 year, we will. That's one of our plans to introduce more DeFi strategies as well, not only like algorithmic trading, also DeFi yield and etc. So yeah, I think yes. Not now, because now we are doing a little bit different stuff, but in the future for sure.
So overall, just yield generation platform, love it. Closing thoughts, anything you want to cover? We gotta jump here, but it was nice having you on again, Winch.
Yeah, thank you guys. Have a good one.
All right, brother.
Thank you for reminding. I hope we're gonna make it, and we'll bring for all our copy traders and holders.
You're gonna make it. The most bullish thing about ALG and why I loved you guys from the jump when you came on the first time was you had that 3-year track record, the 4-year track record trading Euro USD, nothing else, and doing it consistently for so long, verifiable. And I think that's the biggest unlock, especially in a volatile, uncertain market like crypto. So I appreciate you coming on again, Winch, and talk again soon.
Yeah, thank you guys. Talk again soon.
Sweet. GM. Guys, how are we doing? Markets are looking treacherous right now, to say the least. Bitcoin down 3.5% on the day as we continue this just brutal month. From the top, we are down nearly 30%. Ain't looking great. Josh is not with us today. He is up on the screen though. Josh,
just saying hi, supporting.
We got PYTH coming on.
PYTH.
Right, PYTH. I don't know. I think PYTH, I think Python, but you're right. We got PYTH coming on, as well as the Pantheon, another project that I'm not too familiar with. Chill was talking to him a little bit, so he'll probably have more information there. But yeah, dude.
Yeah, it's a bit rough. Definitely rough out there. Do you hear echo in my mic by chance?
I don't.
It's good? Okay, good. Yeah, rough. I don't know if we can throw the chart up and look at a few candles. But
at this point, it just feels like I'm coming on here and spinning the same track every day, you know?
Yeah. which is reality. So like also okay, but yeah, it's
We'll start monthly. I mean, that's a rough looking candle. If we close like this, I mean, that'll be one of the worst Bitcoin candles we've seen in some time. You got to remember, people always say, oh, well, we've had Bitcoin, we've had 6 Bitcoin candles that have closed, more than 50%. We've had 5 Bitcoin candles, and people do these comparisons, but they're doing them at completely different market caps, right? Bitcoin is much more valuable now than it was when these candles closed daily, weekly, monthly days at extreme low points. Bitcoin's a much bigger asset now. So for it to lose 30% in a month, or I guess 30% since all-time highs, is much more significant than even losing maybe 60% a few years ago, right? So you have to understand the difference there.
maybe a temp check on the DATs. Like they were they buying the highs, and now that are they out of the market and just like struggling? Like I don't know.
People are calling this the DAT unwind. So I don't have any numbers or statistics to prove that the DATs are selling out. I think we obviously have seen more outflows than inflows from an ETF standpoint. But yeah, I have no numbers to prove the DAT unwind, but that's what people are saying. Just looking treacherous, man. I mean, that is 3 weeks of very, very red candles. Obviously black in this case, but we got Chill coming on in a second. I'll see what he thinks. Ironically,
GM.
though. Oh, what's up, Chill? GM.
What's up, guys? What's happening?
It sounded like you were about to come in with the energy, and then I snubbed you.
Now you're chilling. I didn't want to interrupt. Go. Keep going with your macro, bro. I was listening.
Dude, I think I sound funky. Maybe it's just myself. I'm really congested today for some reason. I'm not sure if it's allergies or what, but not sounding too great.
I have a DAT tweet here that we can look at actually, because I think this is pertinent to right now. So this is showing DAT inflows by asset. You can see, I'm assuming there's not the full chart here, but this is a screenshot from DeFi Llama, assuming the orange is Bitcoin. Pretty consistent buying throughout 2025. A lot of buying at the end of 2024, assuming a lot of that's MicroStrategy. And then over the summer, a lot of activity, August, September, October activity. Then you see some different colors, and then the majority flips to Ethereum. I'm assuming some Solanas here. Unfortunately, I have to go hunt this on DeFi Llama to see what these color codes are. But look at November. I guess these are weekly, right? So the last 2 weeks of October really shut down, dropped off a cliff.
Yeah.
So there seems to be a bit of maybe buying here in November, but nothing compared to what we saw over the summer. So the DATs fully allocated, it seems, or significantly allocated, and that bid has dropped off a cliff.
So I like that. I think that's a really great segue to my next point. Basically everything that we've seen in this quote unquote cycle, I guess I'm going to start calling it bull market. I don't like saying the word cycle anymore. GM Jeet Sparrow, what's going on, brother? So everything has been a structural bid. So the ETF adoption, the institutional adoption that we've seen so far, the DATs that have been created, all of that is a structural bid on Bitcoin, right? We've talked about this, I believe it was yesterday on stream, where we mentioned there's a ton of tailwinds in terms of inflation. There's money printing. There's a ton happening from the global macro side of things. So I'm going to share this tweet with you guys. And let me share my screen. So here's this tweet from Zero Edge, and again, perfect segue from Josh's point. The Fed has already begun to draw down the TGA. So it's down about 34 billion so far. What does this mean? Well, this comment here puts it into perspective. This chart shows the TGA. This is basically the US government's checking account. When the TGA goes up, the government is pulling money outside, pulling money out of the financial system. They're collecting more taxes, issuing more debt than it is spending. And then lastly, when the TGA goes down, the government is injecting liquidity into the financial system, which means that spending is more than issuing. So we've talked about this yesterday a little bit, but we're already seeing, tangible evidence of liquidity injection coming into the market. So what we've seen so far is basically a structural bid on Bitcoin, just adoption happening, despite the fact that over the last few years, as you can see from this chart, that the liquidity has been being pulled out of the system, right? And so now when liquidity flows back in, this is where we see, an added pump on Bitcoin because of its sensitivity to liquidity in markets. So yeah, I think that's a perfect segue. Like, things don't depend on essentially what happened over the last few years with the ETFs, with the DATs, is they've been essentially building highways, right? Highways for capital to flow into the crypto markets. We've also built highways for capital to flow into on-chain, right? We've built highways like the ETFs, like the DATs, but also like the Phantom app, right? Like the FOMO app. We've seen so many different apps, even SOAR. They have, apps, Avicii with the on-chain bank and on and off ramping there in a permissionless way. So there have been highways created that, that look like a bid, like a structural bid. That's what I call it on markets. And so now we're seeing more evidence of that. And I think, I think Q1 is really what we look for, in my opinion. I can share some broader thoughts on that if you guys, unless you guys want to comment on.
I mean, keep cooking on the macro.
Let's do it. All
We
right.
got
So
15 minutes.
Here's the Bitcoin chart here on, let's look on the 3-day here. So as you can see, we've built up a ton of resistance above us, right? We have this monthly demand zone here, this weekly demand zone, more specifically that we're going into. Once we actually reverse, I wouldn't be surprised to see us do something like, let's say, go into this demand zone, make it look like it's a complacency shoulder, right? Going into 2026, but then bang, actually, again, last week we mentioned on stream that we need to break the 4-year cycle thesis. As long as people think that the 4-year cycle is still a thing, it will affect the buys and sells in the market. So now people are thinking, okay, look, top is in. What we can do now is prepare for, some sort of dead cat bounce, where we bounce into resistance and then we completely sell this whole thing off and hello, the bear market, right? What we need to do is, to catch these guys offside is, sure, form this complacency shoulder, come back into demand, but then completely reverse, right? Like, max pain is higher, not lower, still. And so once things, once we actually, or if we actually get this movement higher, it breaks this 4-year cycle thesis. And now many who didn't expect this, they kind of don't have a foundation to stand on anymore. And so that's kind of where I get this Q1 thesis of next year. I'm still fleshing it out, right? Like, I just put out a macro post yesterday, just kind of on my thoughts about where we are right now in the market. And that can be seen here, just in case you guys didn't see it, but basically covered some very basic stuff. We covered others, Bitcoin, right? Covered the setup, and you saw it here live a little bit on stream yesterday. But after doing some digging, you notice that over the last several bull markets, others BTC has drawn down, 75 to 80%. before, massively pumping shortly thereafter. And while the time didn't match up, we still now are just getting to this point where we're down minus almost 80%. And so we're at this point where structurally it looks like we're about to catch a bid. At the same time, we see that the TGA from the Fed is drawing down. Liquidity is coming into markets, right? We've covered the highways that will lead capital from TradFi to crypto. And so to me, that acts as tailwinds that encourage, that give me some ground to stand on to say that this chart goes higher. So that's the others BTC. Then we have state of liquidity. We covered this on Monday as well. Just kind of talking about the global stimulus that we'll see coming out. This will lead to inflation, which will lead to higher asset prices. And one thing I don't think I ever showed you guys on stream was this chart here. On the top is Bitcoin, and on the bottom is the ISM. We here at MCG, we've told you guys many times, we don't believe in the 4-year cycle anymore. We think that that's over. But what I do think the Bitcoin price mimics is this ISM chart. Now, basically, it's just a business cycle, right? When rates get when rates go up, capital becomes more expensive to borrow, so it's harder for companies to hire, to expand, to build, to grow, to scale. When the Fed starts to cut rates, then companies can start doing all of those things, and so that results in an uptick in the business cycle. Now, this uptick in the business cycle also coincides with an uptick in Bitcoin. And again, so far, we haven't seen much of an uptick in the business cycle. We haven't seen much of an uptick in that yet, but it looks like it's coming as rates continue to go down. So again, just something again to show us that, hey, look, all of this here that we had so far is just adoption, structural bid. You can't have big players like BlackRock endorsing crypto without seeing a chart pump. However, from a macro point of view, things are the business cycle isn't in full swing like it usually is for these past Bitcoin bull runs. So something to keep in mind there. But yeah, we have a ton of tailwinds, covered a lot of this, and we covered this chart as well, just kind of showing again, still room to go higher. So that's the macro framework. Wanted to share that with you guys. That's my take so far here. Job's not finished, fellas. What do you think?
What about a bear case? Do we want to get into the bear case? I have an interesting.
Nope.
No, keep it as bullish as you can right now. I have an interesting tweet though. Pull up here. It says, Justin, 95% of all Bitcoin bought in the last 155 days is now underwater, higher than COVID, 92%, and FTX, 94%. I don't know how we feel about this statistic. I don't know if there's actually a thesis or trade to be made off it, but pretty interesting to see that there's more people that bought Bitcoin underwater today in the last 155 days than there was during COVID and FTX. And they might be cherry picking data. You know how some of this stuff gets, but I don't know. That doesn't seem like a top indicator. It seems like more of something you get closer to the bottom. I think when you look at macro, this cycle, interestingly, hasn't signaled any of those top signals that we're used to getting, before crashes. None, like not one. We really haven't seen it. And so
actually on that, Dom, I'm going to share this screen as well, just to kind of cross with your point. But yeah, go ahead.
What is this? What is this screen?
Bull market peak indicators. 0 out of 30 indicators have hit thus far. If you guys want, I can share with you guys the link.
I love how you just had that on deck.
Oh yeah, bro. Always got to use these indicators, bro. I'm not trying to get caught lacking. Pi cycle top indicator, Bitcoin rainbow chart. We have ETF to BTC ratios. We have USDT flexible savings, RSI on the 22-day altcoin index, Bitcoin dominance. I mean, look, you name it. We got supply, short-term holder supply, long-term holders. We have all sorts of indicators, Bitcoin 4-year moving average, and none of these things have hit. out of 30 indicators, none of them have hit. And so far, average progress isn't even 50%. So again, more room to say the pump we've seen so far is not retail coming into the market and FOMOing in and causing massive euphoria. It's a structural bid. It's institutions adopting crypto technology, blockchain, and crypto rails for the next phase of the this financial revolution.
Yeah, dude. It's just, I don't know. It's interesting. I do want to think about the bear case though, because I don't want to be the guys that just bull post all the way through a bear market. The truth is, how low, if you do look at a Bitcoin chart, and I'll pull one back up just for the sake of it, how low do you really think we go? I think you guys have seen this zone I've marked out here. I do think we get some sort of at least dead cat bounce here, whether that's bounce, roll over, or bounce in new highs. I think it a little bit depends on macro. We have a lot of analysts saying we're in an AI bubble. We're in an AI bubble. There's so many stocks that have gone parabolic surrounding this AI. They're catching, $1 trillion of investments. And, OpenAI, for example, has only made $30 billion this year. Are these AI companies getting overvalued? Are we seeing an overvaluation in the equities market? And I haven't put enough thought into it to really see which side it's down. We know a lot of the times these analysts are incorrect. If they're calling for something, it typically doesn't happen or it works the opposite way. But it is something to think about. If the equities bubble does pop, it's likely Bitcoin follows suit. Unfortunately, Bitcoin's really tied, at least during the bad days, Bitcoin's tied to the equities market and the broader market. It's funny how that works. During the green days in equities, Bitcoin is red. And during the red days in equities, Bitcoin is extra red because equities are red. So I don't know. I think my thesis here, though, is we get some sort of reaction here. I do agree with Chill. Maybe this is an extended cycle. Don't really believe in the 4-year cycle. What's the lowest we get on Bitcoin? Like, what do you think the lowest is? I think this is probably an interesting zone. We had a lot of time in here. How many months? Let me see. We had, 217 days, almost a full year was spent ranging here. I think if we get back down to the zone, we could see willing buyers stepping back in again. Like if we do enter a full swing bear market, I don't really understand how we'd be able to get below that. Like it would take some serious black swan or something to take us there. That would put us at 52% drawdown. In the past, we've seen higher on Bitcoin, but that's in a completely different market, right? We've seen 77% last cycle. And again, this is, prior to having this institutional bid. Even before that, we saw the 2017 to 2020 COVID cycle got 80% down. I don't see more than, I definitely don't see 70+% down on this cycle. If we are top of the peak, if we're at the top of the market here, I do think this 50% is probably the lowest we go if we do enter a full-fledged bear market. It's just different market environments, frankly. So what about you guys? If we were to hypothetically enter a bear market here, whether or not that looks like the typical 4-year bear market or 2-3-year bear market we've seen in the past or shorter, where do you think the lowest point we could logically reach would be?
In the next bear market?
Yeah. If we're in one right now, just assume.
I'd say lower. I'd say we go back to 50K, maybe sub 50K.
50K, sub 50K. Wow.
Yeah. Right now, my invalidation is 75K. We close below 75K on a high time frame. I'm selling everything. Right. I'm selling everything. And just to put that in perspective, I'll put up my chart real quick. Just so that way you guys can see it a little bit more clearly. 75K is about right here. So just below this massive demand zone. Again, this is a monthly, weekly demand zone. Like if we can't hold this, I'm out. However, I don't care how close we get to it. I'm still massively bullish. Maybe we wick below it. Maybe, possibly. But again, I'm looking for a high time frame close, like a 3-day, a weekly close below 75K. That's my invalidation. I'm selling it all.
When you say sell it all, is that on chain too, or is that just majors?
I probably would go full risk off, full stables, and reevaluate. We've seen where like on chain is kind of decoupling a little bit from Bitcoin price action. Like you have some of that happening even right now. We see projects like Edel. I don't know if you guys saw that one.
The base trade, really good.
Yeah, the base trade. So like there's still other trades to be had, right? Like there's still other things going on. And so maybe on chain doesn't completely die, but I would personally have to reevaluate. I would have to reevaluate at that point.
Yeah, you know, interestingly though, I'm looking at my on-chain bags here, and I would say in prior cycles, if we saw a 3% down day, and then the previous days were also 3, 4, 5% down days, on-chain would be just cooked. Like it would be in the gutters, everything at zero. I'm not gonna lie, most of my stuff is less than or equivalent to Bitcoin's down 3% right now, which is nice to see. That on-chain is actually holding up relatively well. But
yeah, this literally this chart is just like, you know, sellers are exhausted, but you see those memes, right? When they're like, sellers are exhausted, but then like actually there was one that I saw, one that I saw recently. If I saved it, I'll share it here. Let me see. No, I did not save it. Dang it. But yeah, that was one of those charts where it's like, you know, look, sellers, you know, you might think that sellers are exhausted, but in actuality, they still got more ammo.
I think, you know, but you're looking at different things, right? Like macro, yes, I think sellers have plenty more ammo to go. On chain, I feel like it's more of a demand thing. It's a less about supply in hands of weak hands and more about just no one's here to buy it up. I think we see the price action on chain right now for a lot of things, and it's actually pretty tame compared to macro and broader, you know, large caps and mid caps. So is the question, okay, there's just way too much supply, or is it wait, there's just no one here to buy? Like we just have no demand right now. And I think we're kind of on the latter end of that question. And I think if we do get on, of course, go into a risk on environment, like I really don't think there are many sellers left. I just think we have no one buying. And, you know, it's hard to say that in theory, but I think that's why on-chain's holding up so well relatively.
Yeah. And I guess it just depends on, yeah, it's mostly narrative driven. So it just depends on what the markets are mostly interested in right now. But looking forward to better days, man. Boy, look at this chart, guys. Look at this Bitcoin chart, man. Like I just love being in crypto so much. Like I just love being in this industry.
First time, eh?
No, definitely not.
It's all right, guys.
I'm just trolling.
It'll be all right. It'll be all right.
On a good note, we have PYTH coming on, Pepito coming on from PYTH to represent. Maybe they just turn off the Oracle. Maybe they just stop showing us the feeds here.
And Kana, please turn off the oracles so that we can't even see these charts here. I'm just gonna add them.
Pepito,
in the wild, just turn off the Oracle. DeFi just stops, and see you in 4 years.
Yeah, that's got to be a pretty prevalent internal discussion going on right now between the team. Just, you know, hey, what happens if we just flip it off?
Well, I think in most cases would be fine. Or I mean, there's a bunch of DeFi apps that use oracles, but a bunch don't. So you'd still be able to trade on your favorite centralized exchanges and so on.
Well, nonetheless, despite market conditions, we're happy to have you here. What are you drinking? Is that some tea?
It's tea, yeah. It's freezing now back in France, Paris. So back on the tea.
Nice. No, I don't blame you, man. But nonetheless, we got you here with us. You're chief of marketing for PYTH, and we're excited to have you. So we're gonna go through a bunch of stuff today. We're gonna learn about you. We're gonna learn about PYTH. We're gonna talk about, you know, some of the innovations you're making, especially with equities. I see that's something you're diving into, something we're very interested on in this show. So it's just gonna be a super cool conversation. But can we start with you, Pepito, and talk about your position at PYTH and how that kind of came to be?
Yeah, no, but thanks for having me on, guys. Super excited to be chatting with you too. But no, so Pepito or Pierre in real life. I'm French. Been at PIF for a bit more than 2.5 years or so now. Started very at the bottom of the ladder as the intern, let's say, and I guess moved my way up to working on a bunch of the marketing things that we do at PIF. And yeah, and for the ones that don't know much about PIF, we're, Oracle specialized in financial data. As much as we try to now avoid the term Oracle, which is very all-encompassing of bringing something from off-chain, the real world, to on-chain, PIF is a lot more than, something very specific in the industry where we provide low latency, real-time financial data. So you can think crypto prices that I guess you guys were talking about earlier and the charts. So you've got BTC price, a BTC PIF price, and a bunch of other assets. So I think today we have about 1,600 live price feeds that cover crypto, RWAs, so encompassing US equities. I think we've got Hong Kong stock markets type of things, gold, silver, foreign exchange, and I mean currencies, and a bunch of others, Kalshi, GDP data, and so on. So yeah, I guess the tagline for us is the price of everything everywhere, the price layer. So that's really where we're trying to push deep into the space in blockchain and for TradFi, as we try to we've got some very good data that a lot of big tier one banks, big players, institutions, as well as some DeFi protocols we all know today use and rely on for their operations, pretty much.
Yeah, this is an interesting one. I see a lot of your partners here. I see Revolt. I see some others. Let's see.
OKX, I think I saw in there. Was it?
OKX. I mean, there's some big people you work with, but I noticed a few TradFi is the ones I was really trying to highlight. Was PIF always a TradFi service as well, or it seems like when you look at crypto, PIF is one of the few projects that's really tapped in and on the pulse with TradFi equally as much as crypto.
Yeah. So I think the genesis story, it comes out of a couple of the early contributors to PIF who launched the first ever product on Solana, and the few price feeds come out of jump trading. So trading shops, Mike Cahill, the CEO of Duro Labs, who's a contributing company to PIF, has worked in FX trading before, and for the past 20 years. So we've got some of those, huge brains that I guess worked with the Monad guys a bit, like Keon, James, and so on. So you've got a group of people here that have really a deep knowledge into how financial markets work globally. I've worked in this space for 10, 15 years. And when this, I guess, crypto DeFi stuff kind of came along, they were like, okay, what are the solutions? Or I guess those big trading companies, trading firms, and big players were like, okay, how can we contribute? What are the gaps that we see into this DeFi and blockchain world that we think we can fill that gap and create a product that helps us, I guess, because I guess they were thinking long term, saying at some point we're going to be trading on chain, and this is kind of what we see today. A bunch of more trading shops trading on Hyperliquid and so on, and so they said, okay, there's this market data stuff that we haven't, that the Oracle problem hasn't figured out yet. There were some solutions. Chainlink is one, that's 7 or 8 years old. That has started the work on this, and PIF and those guys were like, okay, there's something more that we can do. And it's very much, I think one thing we say a lot, it's built by institution for institutions. So all along, the plan was to, okay, how do we create the most pure real-time data from the sets of people that we know? So you've got SIBO, Jump Trading, Virtue, Optiver, LMAX, Lays, a bunch of those guys that are, super, they talk in microseconds, not even milliseconds when it comes to trading. So they were like, okay, how do we make this happen on chain? And so this is where the model where PYTH rethought about this is like, okay, we're going to get the price data from the sources where the price discovery happens. So jump trading or other of those guys trade every day. And well, now they provide data to the network. PYTH does a bit of the math aggregating magic that I could not explain as a smooth brain here. But we've got pretty much a bunch of sources that give us the price of Bitcoin every millisecond or so. We aggregate and make a PYTH price that is available on 100+ blockchains today. I guess that's a bit of the genesis of the story.
Yeah, I really am curious to dive into this because I look at some of these publishers, and obviously there are two sides to this, right? And maybe you can get in more detail in a second. But how do you guys, obviously your team has a deep network, you're well connected, but how do you guys build relationships with people like Jane Street, one of my personal favorites, or 2 Sigma? Obviously Wintermute's more crypto native, but some of these other TradFi giants, you could say.
Yeah, so I couldn't tell you who were the very first ones to be on board through pure relationships that we know. Then moving on, it's like, okay, this is a network where we want all participants and I guess shareholders of the network to see the value of participating and contributing to the network. So on the data publisher side, so those guys we're looking at right now on the screen, they get rewarded for providing data. So depending on how many assets they provide, on the quality of the data they provide, they get paid pretty much. That's, I think, the most common, a simple explanation to this is there's financial incentives to be providing good data to the network. And then I think the added thing that they're like, okay, we must be in there is, I guess they're seeing the future of financial data and blockchain technology as a whole and trading, where they're like, okay, being a member of the PYTH network and a contributor really gets us into the door if we need stuff. And this is where, this is a network, and we try to, whenever we've got either an app saying, hey, I'd need an intro to this market maker or this trading firm because, I don't know, XYZ. Well, this is an open network where we try to create as many connections and value through the network. So that's the added value on top of the pure financial. I'm getting paid to provide data.
And then who's obviously you guys are paying for the data, I'm assuming, or is it you guys paying for the data, or who's buying this data from the publishers?
Well, for now, it's users or the applications. So the most recent announcement, I guess, product announcement we had was about PYTH Pro. Sorry, the dishwasher is going off. Hopefully, I don't know if you're hearing this, but these guys now pay a subscription to access the lowest latency data, certain asset coverage, and so on. Before that, it was through, I guess, fees on chains. So some chains, it was very cheap, but you pay a little fee every time you want a price to be updated on your chain. Because prices for now are on PYTH own blockchain, I'd say, PYTHnet that we call. And then applications on Base can say, hey, I need the price feed of BTC to be updated on my chain. I'm calling the price on PYTHnet. And so each of the transactions pay a fee, very limited in terms of fees. So this is where now it's all about the future of the network is about monetizing that data on our hand, where either it will be through DeFi builders paying for the data, or the one that we're also now attacking is more traditional finance business that, pay for, the best comparison in pay for Bloomberg terminals, pay for exchanges, licenses. Well, hopefully we can come in with PYTH Pro to say, hey guys, we've got a good alternative, or I don't know, a complement. Still to be very much determined, but we've got a bunch of assets that we've got real-time data for that you can use.
And so what does this mean for the future of PYTH and bringing some of these markets on chain? I guess when I talk to you, Pepito, if you had to envision a future of on-chain finance and just where we're headed, what does that look like?
That's such a good question and a hard one. Because I mean, I think is as we see a lot, or at least when I first came in a couple of years ago, it was everyone and their mothers were launching a chain. That was the thing, and so PIF, I mean, core one of the key marketing thing was to say, hey, we can deploy on chains rather quickly. It's very scalable, so there could be 1,000 chains tomorrow. PIF could be available on those 1,000 chains without any having to rethink any of the technology behind. And then now, I mean, I think we're seeing a bit of a, some of the top players that have the most product market fit come out on top and kind of eat, the competition's launch. So I mean, we've got Hyperliquid that is likely going to be one to compete with the big, the Binance and the other big sexes. So I think we're going to see a bit of filtering where a bunch of apps that never really got product market fit or traction or users or volume will slowly die. And I think the meta of tokens and revenues on your project and not just governance token is going to be super important for the next phase. But I mean, whoever is going to provide the best trading experience is going to win. For now, Hyperliquid takes the cake, I think, if you're thinking, I guess, DeFi, and one that has a chance to take on the centralized exchanges, I guess, dominance.
Maybe a far out thought here, but a lot of these publishers, I'm assuming at some point, and again, I'm not sure how far out this is, are going to want to come on chain. At what point do they start, bringing their own data on chain and stop going through someone like PYTH or PITH? Is that something you guys are worried about?
I don't think so. I mean, so I don't think so. You're asking me a bit some, I guess, not technical, but some may not have the knowledge for. But
Okay.
it's not trivial. It's not trivial to be, building and maintaining an Oracle network. And I think this is where PIF has done a great job. It's pretty seamless for a big trading firms to say, hey, I want to provide data on chain. I can use PIF. And it can likely work with a few other Oracle networks out there. Because it's a risk that many will not want to take. An Oracle malfunction, an Oracle stop working an hour is, a huge mess, can cause drastic losses across DeFi. So this is something you need to be really careful about. So it's not like, oh, I'll spin up my, validator on chain ABC, send data, and think about it in a year, and hopefully we make a ton of money off it. I think they'll see the value of the data being available on chain, and I guess they're getting financially rewarded today through PIF, and hopefully we can keep the positive outcome, financial outcome for them as long as possible, and increase this is more and more incentives for us and financial rewards to keep working with this.
And so I guess a question I have on that is more so just kind of walk us through the competition, the market that you guys are in, but more so how you differentiate yourself from that. So how big is this market, and how do you guys set yourself aside?
So I'll try to take this in a two-part answer. First, the market data business is a 50 billion business today, and I guess I'm taking a bit of step out of pure blockchain stuff, but it's like the Bloomberg, the Refinitiv, who are data service providers for all the big trading shops and so on. This is a 50 billion market industry that grows, I think, about 15 or 20% year on year. So if PIF is able to really get his way into TradFi in just a little tiny fraction, it can be, it's massive. As for a bit more on the differentiation and versus, I guess, Oracle competitors that we have, the thing that no other Oracle price feed provider can say is that they have full access and it's full first-party data. First-party data is straight from, I guess, the trading firms, the guys that actually trade a bunch of these markets. No one has that pure access to this data, and comparison, and a bunch of others use what I guess we call third-party data. So from aggregators that are another jump from the first party. So you do a jump and then another one to get that data. So it's delayed. You're not entirely sure of the quality of the data. And one key example, and that has really, I think, resonates with a bunch of people, and we talked about Hyperliquid a bit, is PYTH as the exclusive partner of Blue Ocean. Blue Ocean, I had never heard of before 6 months ago. I'm not into the TradFi trenches and so on, but it's the biggest overnight US equities traders in the world. And I think it has 98 or 99% market share. So as we move to 24/7 trading of every asset in the world, including, I guess, US equities, Blue Ocean is the player you want to get data from, to have price feeds that run, I guess for us today, it's 24/5. We don't have weekend prices yet. No one has. But PYTH is able to price Tesla throughout the week, overnight, and so on. And I guess if you guys have followed a bit the HIP-3 permissionless deployments, and now that you can launch these markets and trade XYZ, well, these guys want, launch 24/7 markets. They do their own custom pricing calculation for the weekend, but they want as much accurate data on a continuous stream 24/7. So that's really the differentiator versus others, that they cannot say data quality is paramount. And I think we've started doing a bit of quant research on our end versus competitors and some of the equities price feeds they have. It's a no-brainer. It's significant bips off, late, lagging behind, where we're very proud of the data we push out. And this is what builders want and what traders want, because some of those, XYZ 100 Tesla traders on Trade XYZ, well, they don't want to get run over by some bad Oracle pricing and liquidated for bad data, pretty much.
Got it. And I wanted to kind of jump into tokenomics a little bit, but Dom, I didn't want to get ahead of myself, just in case you had a question or two you want to ask.
Yeah, I would love to just continue to touch on this tokenized stocks and equities angle, because I think it's so interesting. I don't know, maybe a broader idea from you, Pepito, but like at some point, do we see on-chain being the go-to place to trade equities, or are we way far out from that? Like, is it important to have equities being traded on-chain? Just general thoughts.
Yeah, so I think there's a ton of interesting tokenizing products, protocols, or teams working on this. Quite interesting. And I guess you were scrolling on the Camino X stocks from Bakkt. You have the centrifuge of the I guess more. These are the ones I know on Solana. You've got, I guess, Superstate and its opening bell that allow any companies to, I guess, tokenize its stocks and make it tradable on chain. So there are lots of very interesting. I mean, it's more than experiments, but early trials into, okay, how do we bring actual stocks trading on chain? On the price feed side, for us, it's usually pretty easy to price those, because they're mirroring the price of off chain, which we can do, and so on. But actually, earlier this week, and this will come out next week as a piece of content. But we've had a great podcast recording with one that knows a lot more than us about the timelines of potential 24/7. But they're one of the bigger, biggest players in the TradFi space, and they're talking about tokenization and how do we make 24/7 happen. So it's not far-fetched. I think there's a couple regulatory hurdles to look at. Is this demand there? But if there's demand for people to trade 24/7 and over the weekend and so on, TradFi is going to meet that demand and come on chain, which is likely the most logical place to make that happen.
Now, TradFi is pretty slow moving. Like, do you have any timeline you could see this happening at? And is there a value for it to happen? Do they want it?
Yes. And I think we have I probably had the same very conception of TradFi where it's slow. Or I'm thinking banks like this is slow, but there's how do you say? A segment of TradFi that is very fast moving, that see business opportunities, and they're going to run to be first doing this. So I think there's the few key players that are already pushing kind of the pure TradFi 930 to 4 stock trading, that are going above and beyond on this, are saying, okay, how do we position ourselves to be the first to make 24/7 happen? It would be a huge unlock for a shop to say, hey, traders, my platform has the best liquidity execution 24/7. That's something that they would make a shit ton of business doing so. So I think the right players that we don't hear too much about are definitely on this to make it happen.
Sweet. Jill, I saw you unmuted. Did you have something?
Yeah, I guess just on the I wanted to get an ICM take here. Because we had Vibhu from Solana Foundation on some time ago, and his take on ICM was a little bit different than what some thought. So I wanted to kind of get PYTH's perspective. Is ICM something you guys are even aware of? Is that something that even comes on your radar? People think about it from the Solana standpoint. They're thinking about it more so as tokenizing stocks, right? Bringing traditional assets on chain, and that's the arena you guys operate in more so. But I think from a trader's standpoint, a lot of people are looking at ICM more so as tokenizing equity, tokenizing startups. Where do you guys kind of fall in that discussion?
I mean, I think we're a bit of a servant and a helper to internet capital markets, where I guess we can focus on Solana, who's I guess been harping on that or jumping on that narrative very well, in my opinion, where we've got builders and apps asking for the feeds and the stuff that they need to make their protocols go. I mean, latest example is Loopscale, that has launched the first permission credits market with Accred from BlackRock. So these are some stuff that we see where there was some announcement a few months back of a bunch of those funds tokenizing these guys tokenizing their funds. Well, to give it some utility and potential usage on chain, most of the time they need a price feed and an oracle to at least price the assets. So myself as a DeFi user on Solana, I can get exposure to a bunch of these assets. And I guess it's the same example with BACT or some of those stocks that are tokenized. It's very interesting that myself from my little Solana wallet and portfolio, I can get exposure to Tesla in just like that. I don't have to go through my usual bank or where a brokerage account or so on. I can do get a few shares. That's quite a lot already, but I can get some Tesla exposure right from my wallet. So hopefully, obviously, there's some research to do into all those tokenizing stuff, because what is it backed by and so on. The mechanics are always interesting to look into. because there's nothing. I mean, I don't think there's anything where I can show my my Tesla Solana stock holdings and say now I'm a Tesla holder and I can vote. But there's some very interesting stuff where PIF, if there's demands for some price feeds from builders that are like, okay, we have demand from those RWAs, gold, tokenized gold stuff, and so on. We're gonna see it to deliver so they can operate.
What about private companies? Obviously, you guys do price feeds. It's much harder to do a price feed on like a private company or someone tokenizing a company on chain. Is that a discussion you guys have had internally where it's like, hey, how can we make price feeds for private companies 24/7 available?
Well, yeah. So when you say private companies, you say I guess pre-IPO stuff.
Yeah, nothing on exchanges.
Yeah. So it's always a topic that comes back in a bunch of our builders asking, hey, do you guys have this type of data, this kind of data? Where for now we've very much focused on, I guess, tradable assets and tradable financial instruments. I think there's 10,000 more that we can list before we'd be like, okay, there's so much demand for this pre-IPO stuff. I think some guys are doing it very well. That PIF isn't, I mean, it's not the core key feature of having those trading firms, exchanges, publishing data to the network. They can't really price this pre-IPO stuff. So for now, we've kept it on the back burner at some point. We've done a couple fun, cool experiments, I'd say, with the US Department of Commerce that publishes economic data to PIF that makes it available on a bunch of chains. More recently, we had Kalshi that wanted its data on chain, said, hey, PIF, can you help us get our prediction markets data on chain? So we're doing this here, this and that on specific use cases, but I think we're very much focused on the financial data, and typically the ones that TradFi is interested in having access. This is where we're, I'd say, laser focused for now.
The prediction market angle is super interesting. Obviously, you said Kalshi came to you with that request. Were you guys thinking about that before? How are you looking at prediction markets now as they completely emerge into the mainstream?
Well, one thing, I guess we work with prediction markets in two ways. Prediction markets that focus on price predictions are, I guess, one of our top user is Limitless, that had made some noise on the timeline not too long ago, where they do short-term price predictions. So they do all the majors, BTC, ETH, Sol, and a few others, and I think maybe a few US equities they do. Where you have an hour-long market, you bid up above this or below that. So PIF can power those prediction market protocols. As for the more informative yes/no markets, like Zoran Mamdani, was he going to win the New York election? We didn't think that it was worth or valuable for us to create a custom solution. And I guess being seen that we were kind of right about this, as now we've got the Kalshis of the world saying, okay, we want our data to be used. We want Kalshi wants to be the bit of the layer, the infra liquidity, data layer that a bunch of builders can leverage on chain. So we're now, I guess, for Kalshi, just working as a pure, I guess, the most simple Oracle definition is that we communicate the Kalshi data to on-chain. I think, and as a global, I think prediction markets are going to eat a bunch of the news type thing where a lot, I guess polling and so on is really going to have to step up if they don't want to get run over by the poly markets, Kalshi of the world. And I guess Kalshi takes a bit of a sports angle, a bit, a bunch of sports partnerships. I guess poly market as well, but very interesting. that I guess in my opinion, honest opinion, it's becoming our life is becoming a giant casino where I can pretty much gamble on anything.
Yeah, the prediction market, or like the opinion of the collective, I guess, which is the the things you see in the prediction markets where it's like, is Mamdani going to win the New York election? Do you guys, it's like none of that stuff is all empirical evidence. It's people, it's a group of people suggesting that, this is what they think the outcome of something is going to be. Would you guys ever take that data and use it? I know it seems like a lot of your data comes from more,
if we had, and I guess we do have Kalshi as a provider that gives us some of those markets. I'm not entirely sure now what the list of Kalshi markets that we have live on PYTH, but I mean, at some point, if we had applications telling us, hey, I need, I guess, prediction market data to drive financial decisions. And I think that's one thing that I haven't looked myself too much into. But a bunch of these, are the rates, the net Fed cut rates going to, increase, decrease, where I guess you could imagine a world where these apps, where myself to manage my portfolio, I'm like, okay, hedging depending on the odds of Fed, dropping lower Fed rates, meaning I guess we gamble prices would potentially go up. How do I insert this information into my portfolio management? So if one day some apps are like, we absolutely need that data, and we don't have a good solution, can PYTH do something? I'm sure we'd think about it. But yeah, and that's where I think the Oracle wars, or the Oracle trenches that we see more and more, thankfully, and which is great, a bunch have now their own verticals. I think PYTH is the leader on financial data. You've got Chainlink that does, have 25 different products and do a bunch of great stuff. You've got Redstone that does a lot of good stuff on the risk ratings as well. Seda that does composability. So there's a plethora of solutions that are super cool. We'll be sprinting to where we're best and where we think we can provide the most value.
Yeah, that makes sense. It's just a fascinating thought that clearly people who have an edge in some sort of market can be rewarded for having that edge and making these predictions. And of course, we've seen prediction markets be the arbiter of truth for a lot of stuff recently, having it right or having the answers correct well before mainstream, gets their hands on it. So it's just a fascinating conversation, interesting idea to see that maybe that could be a way that people get their information going forward. And obviously as an Oracle, you're, relaying information essentially. So it's just an interesting conversation. Chill, I don't want to get too sidetracked. We got a couple minutes left before we, transition to the next guest. But would love to get your thoughts, Chill. I know you had some stuff on tokenomics, maybe about the PYTH token itself, if you want to dive into that.
Yeah, sure. Maybe just shed some light on. I mean, obviously, you guys are a massive protocol, right? You have tons of partners, tons of feeds and protocols that you track, and a lot of integrations all over the place, quite frankly. But yeah, just walk us through how all of that value that's generated, how that funnels through the token. What's the point of it?
Great question. I'll try to be brief so I don't run over time. There's the one way today, the token utility is securing the network. You can stake your PYTH tokens onto publishers to say, hey, I trust this publisher to be providing good data. In case there were some Oracle malfunction and so on, and that publisher would be deemed faulty, he gets slashed. So this is the economic kind of responsibilities that are into this. And for staking your token into Oracle integrity staking, which we call, you get an 8% APY, which you can claim at end of each epoch, each Thursday. That's the current, I guess, utility of the PYTH token on top of governance stuff. Now, I think if people want to read more about this, the PYTH Pro blog is the best one to see what's next, where now we're turning on revenues and monetization. More serious monetization about the PYTH products. When a user or an application is going to buy a PYTH Pro subscription, which is 5 to 10K a month, well, this revenue is going to go 40% to Doro Labs, who manages and runs the infrastructure and so on, which is a contributing company to the network, and 40%, and the other 60% is going to the DAO. So for now, the DAO will just, I guess, receive those 60% of revenues from the PYTH Pro subscriptions. And now soon it's going to be up to the DAO to discuss and decide how do we use those 60% revenues, and the foreseeable subscription payments that PYTH gets monthly for PYTH Pro. How is it used? So it's up to anyone's imagination. It can be buybacks and burns, reinvest in the network and the ecosystem. It's up to discussion, and I'm rather certain it's happening pretty soon. So I'd say keep an eye on our socials and so on to make sure you follow up on that.
That's
Hopefully
really
that
interesting.
answers.
Yeah, it's really interesting. PYTH is a top 100 coin, of course, on CoinMarketCap. A lot of these tokens on there, a lot of which are Dino coins. They've been around for a while. They don't really adopt the methodology. They kind of go with the governance model and nothing more. When you guys think about how you can best provide value to holders who have some sort of stake in the network and PYTH going up and performing well, just how do you think about bringing back value to the holder rather than just having a governance token?
Yeah, I mean, I think we've seen the past few months, I guess the revenue meta. I think it's crucial to not just be I guess a meme, or be a meme coin if you want to be, but how are you a serious business? A serious business makes money, brings profits every year, and hopefully it brings back value to the token holders. So this is where I think we're only starting the PYTH journey on this, and which is great because it's governance driven. So anyone can share their great ideas, and we can see how we can make it happen. And I mean, this is a terrible live screen you have where we see all the terrible prices of our beloved coins. But yeah,
We'll
that's about it. Where we're turning on revenues. I think meta or not, this is how successful business run. They make money, so the whole thing can go around.
I guess the last question before you leave, I just kind of wanted to ask, like, what prompted you guys to actually turn on revenues? I mean, we've seen. I mean, there's a lot of top 100 coins out there that they still kind of go with the same old tokenomics model that has proven not to work. What kind of pushed you guys to shift, to make that shift?
I think it was always in the cards to say, okay, there's at some point we want to compete with Bloomberg. I guess that's a very bold and not the most accurate statement, but the idea is that we see the data that PYTH provides as valuable or as qualitative as Bloomberg provides traders. So I can't recall the exact price of a Bloomberg terminal for one person per month, but I think it's 20 or 25K or something like that. So it was always in the cards. It was about, okay, how do we prove the model? I think PYTH did in the DeFi space and derivatives, more importantly, where most of the biggest perp dexes want low latency quality data. PYTH was the #1 oracle on trading volume secured on DeFi Llama until they removed that metric, saying this is not an oracle metric that they like. Yet PYTH was leading there and aims to be keep on leading on the DeFi front. And now that we kind of prove that, okay, we've got something very, very valuable that a lot of people use for next to nothing, pretty much free. Now let's see. I mean, let's go sell to people who were asking for it. Some of the jump trading is using the data, PYTH Pro already. We've got a couple others, tier 1 TradFi institutions in the works as well. So people, I mean, people were kind of, asking for it. So let's do it. And we've got great insight and early results from our free trials and PYTH Pro that was just launched about 2 months ago. So very exciting times, and we'll be working very hard to make it a massive success.
I love that. Maybe we'll close out here with some forward-looking plans, what you guys are most excited for at PYTH, and what you're currently working on, and what people should be bracing for impact for.
I think there's a couple things that we're very excited about is Breakpoint, Solana, where PYTH, the origin story, it's a Solana oracle that suffered through the up and downs of the purple chain. So we're very excited about this, where we have lots of stuff coming out and planned out for Breakpoint. And yeah, I think that's the teaser. Looking forward, I think a couple of the big news we touched upon are coming along these timelines. So no, and more asset, more prices, more blockchains, more users. It sounds boring, but it's the trenches we are in, and that we're super excited to take to TradFi pretty much.
And Pepito, are we in a bull market or a bear market right now? Final question. Or does it not matter?
I mean, I try to avoid giving financial advice. I did talk to a couple friends here and there about crypto, and most often they came back and say, "Oh, look at this shit you had me buy." But no,
Thanksgiving is gonna be rough this year.
The only, I'm a big believer. I don't think you can go wrong buying Bitcoin, to be honest. Long term, if you have a 10-15 year plan, I think this is the asset I have the most conviction in, and I don't even look at the price when I buy, to be honest. Seems like a bear because I think lots of crazy stuff has happened the past couple years, and I think bears are great to have the real builders keep building, and there's no fugazi or fake products getting traction. Now it's okay. How much did you build during the bull that is going to pay off during the bear, pretty much?
There you go. Pepito, we appreciate your time, brother, and thanks for coming on. This was an interesting conversation. Fascinating to see a project like PYTH, just working, get the ins and outs of it. So, man, come back anytime. Thanks for joining us today.
Thanks for having me, guys.
Appreciate it, and take care.
Yeah, you too, guys.
Sweet.
Awesome. That was awesome. It's really interesting to see like a top protocol in the space like that kind of acknowledge that this hyperliquid styled tokenomics model is the way to go. Like, I can't even tell you how many I want to say that's really the one of the very few like top assets in our space that have done that. Kind of said, hey, look, time to turn on revenue. We've seen Uniswap do it. We're now seeing PYTH do it. So I'm wondering if this is just kind of acknowledgement from the rest of the industry that, hey, look, it's time to move in a more sustainable path, from a tokenomics standpoint.
Yeah, dude, I was also fascinated with, just their interest to delve outside of, what we know is the financial markets, and get into stuff like Kalshi or prediction markets, where we see there is data coming from Kalshi and prediction markets, and typically they're getting, the right answers before many people are actually reporting that. And so, like, at what point do we transition from getting our proprietary information from institutions and the leading players to getting it from crowdsourced data like Kalshi or other prediction markets? It's just a fascinating conversation. So pretty cool to see, to talk to the people that are at the forefront of it.
And I'm going to do this, and this might just bear with me here. Just entertain this for me. But here is CoinMarketCap, and I'm sharing my screen now.
Right.
And here's CoinMarketCap. Let's just look at the top 100 real quick, right? So of course we have Bitcoin, ETH, excluding stable coins. XRP, BNB. Okay, you know, Solana, Tron, Dogecoin. Okay, I think those kind of fit. They've made their mark. Cardano, I'm not really sure like what. I haven't heard anything developments lately with Cardano.
Other than the founder just buying as much
Yapping,
Gucci as humanly possible. Yeah.
literally. You know, we've seen Zcash pump lately. Bitcoin Cash, not really sure. You know, not really sure if. Look, I'm
Thought
just
that thing
going
was
through
done in 2017, man. How come it's still rank 13 is crazy.
rank 13.
The Dino coins on here, man.
Chainlink solid. Litecoin recently tweeted that they identify as a meme coin now, right? Like, I don't know what Litecoin is still doing there. XMR, we've seen some kind of recent interest around privacy there. AVAX, I still see some stuff happening on AVAX.
Here and there, it's relatively a dead chain, but it'll have a runner every blue moon.
Yeah. Jeez. Appreciate the honesty. HBAR. I know there's some interest in HBAR, but I'm not really sure what they do. Sui knows there's some interest there. Yeah, same bag as AVAX. Polkadot, I would say, is probably a little worse than AVAX.
I mean, look, Shiba Inu's still up there, bro.
Yeah, I don't know
we went through like the biggest meme coin cycle of our generation, and Shiba Inu is still up as a top 25 token right now, above Uniswap. Shiba Inu is above Uniswap.
I'm telling you, the state of crypto. Polkadot. I mean, I don't know. Polkadot, I don't really see them doing much as of late. Dino, Ton, I see them doing some stuff.
Yeah, at least
Chronos, they announced that they unlocked. They burned like a portion of their supply back in 2021, and they just unburned.
No, they reminted it.
Yes. So
all right, send them to 0.
Yeah, absolutely. Let's see here. I don't even know what Canton is. I don't know if you know.
And by the way, we're skipping over a bunch of stable coins. Like you'll see
yeah
coins up here.
All these stables can get out of here.
What is Canton? I've never
heard of it.
Am I a bad trader for not knowing what Canton is?
I don't think so. Looking at this chart over here, it's been down only. So
guys, maybe
near I can see that World Liberty Fi, obviously Donald Trump. That's even if that's purely memetics and no utility, that's gonna have something as long as he's president. At the very least, Tau, we know there's value there. Aster, we know there's value there. Near value, ICP value. Aave, I obviously large, you know, lending platform. I'm assuming their usage is still good. I don't know from
TVL.
I don't know what their tokenomics look like. I don't know if there's any value capture via revenue there. OKBet, I don't know if there's any value capture there. BitGet, I don't know if there's any value capture. Meme
Again,
Core,
these are just sexes that are like tier 3 centralized exchanges
with just a random token attached.
Yeah, Ethereum Classic is that. I mean, guys, it
really
literally says Classic. Ethereum itself can't maintain any price action. We got Ethereum Classic in the top 50.
Dude, I'm telling you. What else do we have? What else we got? Pi Networker.
Hey, I'm not gonna lie though. I cooked a little bit off of that Pi Network thing, bro. I was mining that back in 2017. Whenever it was like first going live, I got some nice Pi. I was able to claim some, took some P off the table. Instantly sold off in like the first 3 days, but can't believe that's up in top 45.
Love to see it. Qcoin, same thing as the other BitGet and OKB. WorldCoin, have no idea what no idea what the utility is there. Probably none. Polygon,
I like Polygon.
I like Polygon. I don't know how much people actually use them. Trump, same basket.
Polygon was a nice bet before Solana got popular.
Yeah, 100%. I remember their rise. Well, I don't remember it, but I remember like, you know, it recently happening before I came into the space.
That was my best trade of 2020 time.
But yeah, I mean, dude, we can continue going. We still got so many more assets to go. We can continue to look at all this stuff. And the reality is the top 100 is filled with a ton of just glorified meme coins, bro. If you really ask me, just ton of glorified meme coins. And so I think that's why the ICM conversation is really important. I think that's why this conversation with Pantheon is also going to be really important. So let's welcome up to the team.
And Chill, I'll
here,
let you
there.
take over screen for this one for the most part.
Got you. I'll share my screen. How's it going? How's it going?
Oh, yo, we live?
We are live.
We live.
How you doing? How you doing?
I'm good, man. Chill, how you doing, dude?
I'm doing good, man. I'm doing good. Can't complain. Busy as ever these days. What's where are you guys based out of?
Right now I'm actually in New Zealand. It's where I was born, but I usually work out of Southeast Asia between Singapore and Bali, or I have for the last 14 years, but we just had a kid. Another kid's my fourth. So my partner wanted to settle down somewhere quiet for a while.
We hear a lot of people, you know, the digital nomads going to Singapore and Bali. How do you like your time over there?
It's great. I mean, I've lived in Bali for like 14 years. It was just beautiful, tranquil, quiet, but social media kind of ruined it, to be honest. It's just gentrified as hell now.
Really?
It's super busy. We actually relocated our family way up the west coast to get away from all the hot spots and made a bit of investment up there on the land. So yeah, Singapore is beautiful though. I always enjoy it. You kind of have to. If you live on Bali, you kind of need to get off the island back to the big cheese every now and then. Otherwise, you go a little bit island crazy and get a little bit complacent with life, you know?
I hear you, dude. It's a beautiful area. And if you don't mind, could you send us your Twitter just so we have we can have that pulled up during the whole thing? For some reason, I'm having trouble finding it right now. Or do you have your
or if
handle?
you'd like to share that, if you'd like to share your deck, if you'd like to share that deck, you can share that as well. I think that would be awesome if you're open to it.
You and Jill had a discussion prior to this, correct?
Yeah. We had a good hour-long chat about everything.
Yeah, and it was. I think what they're working on is really, really cool. So I want to definitely make sure that like we get as much information out there as possible. But you let me know what you can share, what you can't share. But I'd love to get some of that information out there. I think you guys have a pretty cool protocol.
Yeah, thanks, man. No, we're like full steam ahead from now on. So happy as to share it all, I guess. You want to kick off, I guess?
Yeah, let's do it.
Let's talk a little bit more about your background and we'll start there.
Okay, easy. I've got a background in economics and finance. I got into the crypto space in 2014. My friend told me about Bitcoin back in 2011. I read the white paper, didn't really understand much of it. About 2014, I went all in. I've been really strong in the DeFi space for years. It's kind of where my forte is at. And we've backed over 100 projects through my family fund, Matt Capital. Seen it all from the space, from sort of all vantage points as a builder, as a user, and as a VC. Yeah, and honestly, I've been sort of dedicated to product market fit. What I sort of geek out on most is sort of the tokenomics and economic architecture of all the projects. That's kind of where my strength is. And that's kind of what I've built in Pantheon. It's sort of the summation of the last 10 years in crypto, seeing what works, what doesn't, and seeing what needs to happen. Yeah.
Awesome. So kind of how did that all kind of lead to Pantheon? Tell us a little bit about the origin story there of Pantheon.
Yeah, so I was just a passive investor for years. And then I was part of a collective build on a DeFi protocol. We struggled with user acquisition. And then I looked into gaming as well. I kind of always assumed that my TradFi associates would always just flood into DeFi once the primitives were more mature. But I noticed the more DeFi matured, the less interested they were. And you kind of realized they were never going to be our power users anyway. Started looking at sort of where's the real lifetime value customers, and it's sort of all aligned or converged along the concept of gamers. They sort of mirror the same habits as most DeFi users. They already deal with sort of native currencies and games and stuff, and obviously they're a large untapped demographic that are very progressive, money hungry, because there's a lack of opportunities outside of in the traditional world, I guess. So I built Bigger Arcade. And the whole basis of it was really to provide the economic infrastructure for all games to work on top of. Because if you look at most Web3 games, they all suffered from the same sort of hyperinflationary issue where they just pay out tokens in order for people to come play their game. And the idea that they can retain some of those gamers to actually spend money. Problem is they were all missing just a really functional, scalable revenue layer. So we built that. Now, after that, we spent about $1 million on user acquisition in a single calendar year. We worked with the best of the best, supposedly. The top user acquisition agencies, the top creators, the top marketing agencies, guilds, quest platforms, you name it. We worked with them all. What they didn't know that we had built our own backend analytic engine, so we could see the exact user behavior as they entered our system. And for the $1 million spend, we received about 4 real gamers that actually stuck with the program. So that's like a $250,000 per head acquisition cost. Sorry.
Jeez Louise.
My goodness.
And that, like, I've been in the space long enough, so I'm not what I would call naive, but I was actually quite naive as to the extent of how bad some of these ecosystems had gotten. And Web3 gaming is by far one of the worst. And that really pissed me off because I was very proud of what we built with Bigger Arcade. It works. We had this thesis that we could create an infinitely scalable revenue system, and it works. All we wanted to then do was onboard users. And to spend that kind of capital and just see it all go to waste was just fucking lit something underneath me. So for the last year, I worked with a bunch of partners in my network, and we put together Pantheon. And Pantheon's just a solution for honestly all of it. We've solved distribution in a way that nothing in the space can really compete with. It benefits both projects, it benefits creators, and it benefits their communities. It's a perfect win-win-win alignment of incentives. And you don't even need trust because everything's on chain, transparent. And like I said, the incentive layer is there where you'd just be stupid not to do it in this fashion. And how all that works, we can get into in a second.
Yeah, no, let's actually get into that. So walk us through how exactly you align the incentives. How have you built this solution? Maybe start high level, and then we can kind of work our way down.
Also,
Yeah.
can I butt in real quick too? How would you, if you had to describe Pantheon in a one-liner, would you describe it as a launch pad? Would you describe it as a standard? Like how would you describe Pantheon?
Yeah, we've got a working title, but I'm calling it the success primitive. And the thesis is this, right? I can complain about individual actors or whatever, but there's an overarching theme that's an issue, right? Is we have 40 million tokens in the space now, and I think we're still minting close to 1 million a week, even though the whole meme coin cycle sort of lost a lot of its momentum. The emissions is just huge, and we don't have enough capital to sustain that kind of growth. It's total saturation, right? So with 40 million tokens, that presents 2 core issues for all of us. Doesn't matter if you're a small investor, big investor, builder, we all share the same issues. 1, capital is spread way too thinly across way too many projects. And 2, attention or mind share is spread way too thinly across way too many projects, right? So that makes it hard for even legitimate projects that are, really robust tech architecture, really onto it teams. It makes it hard for even them to get any traction. And even if they get traction, it's very hard to sustain it because there's so much. The rotation meta is very strong, right? Barely anyone holds assets anymore because it's been negative EV to do so over the last sort of 12 months. And so if we look at that, what's the other problem there? Well, if you look at the entire crypto stack, right, we've built an entire industry of projects and primitives that are designed to create and deploy tokens, but nothing was built to make them succeed. There's nothing in the space that's built to make tokens work over the long term, build something scalable, robust. And that's exactly what we built with Pantheon. So that's the whole thesis behind us being the success primitive. We do have a launchpad facility in our platform, but we are specifically and uniquely focused on what happens after your token's live.
Can you walk us through how you implement this success primitive to make these 40 million tokens have some sort of intrinsic value?
Yeah, so we're not actually trying to make every token have value. What we're trying to do is take the 40 million tokens out there and condense them, completely contract all the noise down to 400 to 1,000 better high performance signals where users can get broad sector exposure, to a bunch of high-performing assets that have been curated by very smart, well-networked people with the access to the information and the sources to outperform the rest of the market. So the idea is to shrink the noise of 40 million coins into 400 better signals that capture the majority of the attention, majority of the revenue. Simple as that, just outperformance. Now, how we achieve that is very different. So there's 3 pillars that make Pantheon what it is. Okay, first and foremost is we do have a launch pad, but our launch pad's very different from everything else. With every other launch pads, we go to bet on a single team project in their one single attempt. Now, we have a 99.998% failure rate in crypto, as in that's the percentage of projects that will either fail to generate revenues or any sustainable liquidity whatsoever to make their token valuable. That's horrible odds. So
Yeah.
every other launch pad offers that. Buy this 99.998% fail. What we do is very different. We exclusively launch what we call creator indices, and what they are is a brand new asset class that lets you take more shots on goal with a lower risk, essentially. So on every other launch pad is where you go to bet on a single race. On Pantheon's where you go to buy the entire horse. And what I'll do is I'll explain it based on your terms. Now, when we say horse, it can be team, like builder, or it could be creator. And creator could be all sorts. So a KOL, influencer, technical analyst, or even you guys with your own podcast, right? So we'll use MCG as an example. And what I can do actually is show you guys the terminal if you'd like to go through the back
please.
end.
Absolutely.
Yeah, we can share your screen for sure.
Okay, 1 second.
Obviously, at the bottom there, you see the little plus computer sign. You just push share screen, and we can throw you up there whenever.
Yep, 1 sec.
Yeah, and while you pull that up, I think that's the core piece that I remember that got me interested. Is it's something different than what's already been out there, and it's more so creating like indices that give exposure / provide value to users. So I think that's really the for me the part that I want to dig into the most, and see where the value is.
When you say indices, are you saying like broader indexes of successful launches?
So similar. It's like, because it's a brand new asset class, we can best align it with something comparative, and that would be indexes. So if you look at like the stock market, for instance, right, during the 1900s and onwards, the stock market exploded, and it became difficult for individuals to be stock pickers because there was too many options, lack of information sources, etc. So your return rate just was diminishing because there was just too many options. The answer to that saturation in that market was the introduction of vehicles like ETFs, SP 500, and indexes, right? What they do is they take the best performing asset, like the SP 500 is the top 500 performing companies, essentially. So you can get a single passive investment into broad sector exposure on a single vehicle. Very nice and simple for all investors. That sets a piece of what we've built, but ours is very different. So I'll get into it. You can see my screen?
Yes,
you're up there. Looks good.
Got it. Actually, sorry, I forgot. I can't actually go into this one. I got the devs working on it right now, so that'll glitch out. Let me share the other.
Okay, I just removed you from the stage. You can just let me know when you're popped up with a new one.
1 second. I'll share something else.
But yeah, the issue that we face a lot today, and something we try to do with this show, is just like there's so much noise, 99.9% noise and fluff, and then there's that 0.1% edge that you can actually have. And finding that, how do you do it? Is it through screeners? Is it through aggregators? Is it through broader based indexes? Like it's very tough to say, and I don't think anyone's really cracked the exact answer on that. Is this screen good to go?
Yep.
Sweet, you're up there.
Okay, so that's a really good question, actually, and you're right. So that's what creators are meant to do. So if you think about you guys, for instance, you guys, due to your exposure, you have an edge over the rest of the market. And most of the market are just sort of following other people, because what we're trying to do is access that person's edge, network, leverage, whatever. Right? That's why people follow you, is for your alpha. Now, what this does is take your alpha and essentially enable people to buy into it. So we'll start off with you guys. On Pantheon, let's say MCG, Microcap Gems, you guys create your own creator index. The way it works is really awesome, to be honest. Okay, so you launch a token on our platform and automatically it spins up your index. And your index is basically these two wallets here. Now, down here, it shows the composition of your index, which reflects all of the assets in these two wallets. And it shows their weighted, the composition of it and their weights relative to each other, right? Now, the first wallet here, you guys have total admin control over. So if you guys raise like $1 million with us, half of the money, 50% of the funds would go into your token liquidity pool. The rest of it will get dumped straight into this liquid fund. Now, this liquid fund is your war chest or your treasury. You guys have total control over it to do whatever you want. The goal being, of course, is to use this capital to increase the total value of your index. But also, it's your bank account, your cash out mechanism. So if you build this up to $10 million, you guys want to go buy a house, live happily ever after, this is where you draw the funds down from as well. So the community would see all of this, very nice and transparent. But it's also showing the community, hey guys, these guys have built this asset from this to this. They're going to cash out some. You guys should accept that and sort of create that mindset that guys, people are meant to get paid along this whole service and they want to get rich too. The vault is very different though. You guys have no admin controls over this whatsoever. Every single token that is deposited into this vault is vested over a 24-month period and is distributed to your community members who hold your token and stake it against this vault. This is really important because this is distributed in the form of yield and it's non-dilutive yield. Now, where does all the capital come from here? It comes from all of your deal flow and all of your investments. So let's say from now on, MCG, you say, okay, guys, for every single project we have on our show, we're going to take 1% of their total token supply. We're going to dump it straight in our vault. You guys, as in our audience, you buy our creator token, you stake it against our vault, and you guys get the emissions of all of those tokens over a 24-month period. Now your community members are all getting a yield, right? Paid out over 24 months. So it's a dividend bearing asset, essentially, but they also have the upside to your growing influence. Now, what does that do? What's really exciting? Not only do your entire community member now get access to your entire network and every single deal flow you guys get, right? But they have a single vehicle exposure to all of it as well. And they get to buy in on your growing influence. And it's changed the entire dynamic. So if you guys were to promote one project, right, and I buy that project, you guys get paid $10,000 or whatever for a one-off promotion, I buy that project. You guys shill a second one, you guys get $10,000 and I buy that second one too. By the time you've shilled your 10th one, I'm getting pissed off as your follower because now you've diluted all the attention you guys bring to my original two assets that I invested in and you spread it across all these other ones. Right, I'm now in the backdrop and you're focusing on these new projects. That's the natural decay algorithm of shilling. It just doesn't work. But what we've changed here is now every time you promote something, I know that the yield in your index has gone up, my token value has gone up, and some of your supply has been shrunk as well. So I've just increased my net worth thanks to you guys and every single deal flow you get. So what this does is create perfect alignment between your community and you guys. But better still is for the project. Now the project has an audience that is tethered to their success over a 24-month period, because as that project advances and goes up in value, all their milestones become important because it increases in price, right? Their token will go up in value and the yield goes up in value. So my distributions go up in value. But also that drives demand for your baseline token, which keeps driving up the value of your token. Now, because it's a staking vehicle, people who want to get access to your yield moving forward have to buy your token and stake it. So they're adding liquidity and then contracting supply, driving your price of your index token higher and higher and higher. There's nothing in the space that does that.
So
and now, sorry, one final thing is for investors, you guys become a single exposure vehicle to like all the ICM projects in Solana, for instance. It's just beautiful. I don't have to worry about all the noise. I just buy your token, get access to it all. All the information's condensed into your channel. And anything that I like, particularly from what you guys have promoted, I can double down on and buy more on directly.
Okay, sweet. So let's break down the vault and liquidity. So liquidity, let's say, I think you said you can go out and raise money. how much of that goes into the vault automatically, right? If we go and raise, just call it $10 million, that goes straight into liquidity. How much of that goes into the vault, or none?
None of that goes into the vault. 50% of the funds that you raise will go into your token liquidity pool to foster strong token economy, right? Now your token is liquid. The rest of it goes into your liquid fund because you guys are the proprietor of your asset. You guys also have the access, the networks and everything, and all the deal flow. So for instance, you guys could take, if you raise $10 million, you got $5 million in your liquid fund. You could cash out some if you wanted to fund your personal operations or your business enterprise. But also, you'd want to take some of that money, and all the interviews you guys do with a lot of these projects, you might be able to negotiate better OTC deals, for instance, for your community that they wouldn't get access to. Me, for instance, if I was to launch my own, I'm a builder, right? So I'm not just a builder, I'm also a VC. So I get really good deal flow. A lot of the projects we buy are sort of 10 cents on the dollar before they go live. So I could 10x. So I've just got something. What was that? So I could, one, deposit some of the tokens from the projects I have vested in, but two, every deal flow I get, I could also invest in, knowing that I'm giving my users 5 to 10x growth by the time they go live.
So just to kind of break this all up, so you raise capital, half of it goes to liquidity, make sure your token is liquid. Another half can be freely invested or freely played with, you know, as, let's say that's MCG, as MCG
Exactly.
sees fit. Okay.
Exactly.
And so there's one aspect where this is a liquid fund that we can trade, but then there's another aspect where this can also give you kind of like broad-based exposure through deal flow. So there's really like three components to this.
Yeah, that's correct.
Okay. And go ahead.
Who's the main target for this, if you had to pin it down?
Well, it's projects, creators, and community, right? So for me, for instance, if you look at who's benefiting here, okay, let's look at the projects. Right now, for a project to go live is ridiculously prohibitive. So a new project, they have 0 followers, no one knows about them, but they've spent like 6 months building an amazing MVP. What's their go-to-market strategy? You can work with marketing agencies, okay, $10,000 to $30,000 per month, and they don't do anything, right? You can go to launch pads. Okay, you pay a lot of money up front. Usually they take 5 to 10% of the total raise, 5% paid in cash up front, the rest in tokens, right? Most projects don't have that capital either. Most launch pads are ineffective. If you invested in any launch pad TGE over the last 12 months, well, not last month or so has been improving, but the 12 months prior to that, 94% or 70% below their TGE price. So it's just terrible. The liquidity is even thinner, right? So it costs you this is just agencies, user acquisition. You give out a bunch of tokens to Quest platforms that just gets farmers that dump your token, right? It doesn't matter which angle you go, you always need to go through creators. Now, most creators, if you want 10 of them with legitimate distribution, it's going to cost you about $20,000 to $30,000 just for 2 posts and 1 or 2 engagements. And engagements is they follow or retweet or like a post. That does nothing for your token. Everyone knows the game, so they know it's just sort of a paid shill. So they know it's not really a conviction play that I should buy into either. So, you're out of pocket $200,000, $300,000 just to go from 0 to your first couple of 100 followers. Okay, let's flip the script. Instead, with Pantheon, right? Let's say if MCG, you guys are one of our main creators, a token project, come to market, 0 followers, 0 visibility. They hand us over 2% of the supply. 1% goes to the Pantheon index, 1% goes to MCG. Now, what happens? You guys straight away give them visibility. They're on your show. They now get visibility, and they have your support for 24 months because you're going to track them. Because they're in your index, you're going to track all of their milestones and growth, and you're just going to update your community. Hey, they've just done this, and their yield's gone up, the price has gone up. Congratulations, guys. Your distribution values XYZ bigger now. But also what's happening is they're not just paying to have you align with them. They're actually distributing automatically to your audience. So if you have 10,000 holders, they go from 0 to 10,000 token holders straight away. Instantly, on the first month distribution, 10,000 token holders now hold their token, and those 10,000 token holders are financially incentivized to actually give a shit about the project because they want to see the yield going up every month. It's really simple. You can't buy that anywhere in the space. Nothing in the space offers this. It is by far the best go-to-market. And what's happened? They haven't spent a single dollar. They have 10,000 real followers, real investors. They have the support of my MCG. They have all those eyes on them, and they haven't spent a dollar. And they're already in a better position than the top 99% of projects in the space, right? They're already a top 1% project as far as those benchmarks are concerned. They don't have to go buy stupid bots to have like 30,000 followers from day one, which everyone knows is bullshit. They just have real investors.
So I'm the other question I had around this was with regards to the index token. So can we look at this index token the same way we look at like a meme coin or like or even a utility project or an ICM token? Like what differentiates the index token from everything else?
Well, for starters, it's non-native value input, right? As long as you guys are working, it's always going to have a new flow of tokens that are increasing the yield. Secondly, it generates a yield. Third, it has its own revenue system that buys back the tokens. That's in trading fees and other little mechanisms that are in this terminal. So if you think about it, right, every single project in the space, they come live, they write a white paper, they build a website, and they promote the hell out of themselves to say one thing, right? Guys, we're going to get distribution and we're going to get revenues so you guys can generate a yield or return on your investment. 99.998% of them never get there. You guys, with your MTG index, have that from day one. You have distribution, you have yield, non-native, non-dilutive, sorry, because it's not your token that's going into the index that's like inflating your token. It's other people's value inputs going into your index. Plus, you have the revenues from the trading fees and all the mechanisms in the terminal. You're already better than every other token out there. It's done.
And so
if
is
you
this
run it, sorry, you go.
and is this chain agnostic? If we saw something doing well on base, for example, could we get that into our index?
Yeah, absolutely. We're multi-chain.
And how does that look for the user claiming? Do they just input their multiple wallets, one on ETH, one on Solana, one on wherever else?
Correct. So if you think about our dashboard, it's just an interface that captures the data endpoints from all the different wallets and stuff you guys have.
Okay,
Nice.
cool. I guess my
And
next
so,
question, it would also be when it comes to like the ceiling of the token. This is one thing I've struggled with ICM tokens, right? So you have something like AI or data companies, which are very hard to value because there's no real true ceiling or no historical way to value some of these things. So these growth markets, can get very overvalued very quick, and you can find really good upside on them if you can get in early. Whereas some of these ICM tokens, they have real company revenue. You have a measurable amount of money or value you could generate to a token. When you look at something like this, the vault has, in this case, $576,000 in it. Would the market cap, outside of some people speculating on a little bit of growth, ever really exceed the vault amount?
Yeah, okay. So you're talking about speculative value, right?
That's right.
You want speculative value because you want unlimited upside. We want the high beta returns that meme coins can buy without the downside, right? That's exactly what these are. So if you look at, there's this interesting sort of transition. We're finally seeing the crypto space sort of talk about revenues as a meta, right? Revenues are important, blah, blah, blah. Yeah, no shit, it's a business, right? If you don't have revenues, your only facility to make money is to dump tokens. So why should anyone buy your token?
Right.
You have operating expenditures, blah, blah. But here's the catch, right? And you've pointed out, to be honest, I haven't heard many people talk about that. The problem is, even projects that generate a revenue in crypto, they don't really want to disclose it because the second you have a revenue line, you now have a price to earnings ratio. And you could generate $1 million in your first year. And in the real world, that is a fucking remarkably successful feat, right? To go from 0 to $1 million in revenue for a business. In crypto, that's super boring. And the hardest part about that is if the next year you follow up with like a 30% year-on-year growth, which is absolutely amazing. Hey, bud. Which is absolutely amazing. My son, he's got exams right now, so I'm on his case. I'm writing him like crazy. But if the following year you have 30% year-on-year growth, which is amazing by traditional business tactics, right? It's terrible in crypto. Like, what? You're going to give me a 30% ROI? I'm in this for like 3,000%. So you've nailed it. But the way ours works is simple. For starters, you get a baseline. Now I'm talking baseline minimum valuation, which is a price to earnings ratio based on the yield you're generating. And the formula is really simple, right? We can look at every single other yield generating platform in the space. DeFi, for instance, Lido Finance, it operates at like a 65x. price earnings ratio relative to its yield in FDV. And the formula is really simple. Your FDV should equal your yield divided by your APR times the percentage of people that are staking, right? Because that generates how much yield the user's generating and what kind of demand that drives for the token to drive the price higher, right? Simple. Now, that's the baseline yield. So what it equals is, for you guys, for instance, for every dollar you guys put in your index, you guys should be getting about $30. You're multiplying your value by about 30 in FDV, realized FDV. And as you know how the liquidity and supply shrink works, that increases your liquidity where it's actually real FDV, not just artificially inflated FDV. Now that's your baseline, which is really exciting. So that's the incentive mechanism for creators like you as well to do this. You'd be stupid not to, because you can pocket $10,000 from a single promotion, or you can put $10,000 in your index and it's worth $300,000 for you, right? Simple incentive model that's aligned. But again, that's just the baseline. Now, we have all these supply shrink mechanisms, which changes that dynamic, right? So the rate of the supply shrink, available tokens relative to the yield, drives the price higher. But the real kicker is the velocity of your interest, of your yield. So let's say 1 month you add $100,000 extra into your vault. The next month you add 400,000. The velocity has changed, right? As the velocity changes, the speculative bid goes higher and higher. And now I'm investing not just in your baseline yield, but how quickly you increase your yield and how big your influence grows. If you guys get bigger and bigger and bigger because your community is more and more active with you, your deal flow increases, which means the value of the yield you guys input into your vault gets bigger and bigger, faster and faster. Now you're a real growth engine with 50, 60, 70x upside.
Interesting.
And the best part as well is, you guys, as long as you guys don't stop working, your index is never going to run out of value. So bull or bear market, it doesn't matter. Sure, the assets are going to price down, but in a bear market, you're adding more yield at cheaper rates, which has more upside. So you become like this accumulation vehicle over bear markets. Over bull markets, you're just crushing it.
So are you guys, from a BD perspective, are you guys thinking about stepping in and being some sort of middleman aggregator? Yeah,
absolutely. Yeah. So we're supporting. So our model's simple. Communities aligned with creators, creators aligned with clients. Now you guys all have a win-win-win relationship. For the projects, they just don't fuck up. Now you've got the support of thousands of community members. You have creators supporting you, watching your every move. Just don't flood the market with tokens, and make sure you just build your business. Simple, right?
And this is all trustless, correct? Like, this is all permissionless. This is all this doesn't need anyone's say so to operate.
No, all permissionless, correct.
Got it. And I interrupted you. I'm sorry about that. Please continue.
No, you're good, man. Sorry, where were we though? We're talking about, okay, yeah. So that's exactly what we're doing. So we've got a very aggressive BD side right now. So we win if creators win, if communities win, and clients win. Really simple, right? So all we want to do is make sure you guys all succeed. And the best way to do that is make sure we're introducing the best projects to the best creators. Now we're curating our first bunch of creators. And I'll tell you why, because the mechanisms in our platform heavily favor the first creators who launch their indexes. In fact, we should probably go through that just so you can see some of the functions, because all we've talked about is the actual asset themselves and then launching them. But really, like I said, we're all about what happens afterwards, right? So I can show you that in the terminal. Okay, so if you think about launch pads, they're all about hyping up a project until it has its TGE. Guys, this is an amazing project. You got to invest. It's going to be so bullish. TGE happens, and then what happens? It's all over. They don't give a shit, right? They have no accountability for post-market performance. It's just, oh, that was the project's fault, right? But the value of a launch pad exclusively relies on its return profile. So the most important thing for a launchpad isn't what projects they bring to market, it's how well those projects perform after market. And that's all we're focused on, really. That's why, again, success primitive, what happens after TGE, let's make it perform. So not only do we have the launchpad, we've got the creator indices, our first two innovations that are the first two pillars. The third pillar is the terminal. And our terminal, which you can see here, is not just tailor-made to help you manage your token and growing community, all in one single vessel, one single operating system, but it specifically functions for two exceptional purposes. First is increase yield and value of your index. Just all these mechanisms to increase the value and increase your yield as fast as possible. And the second is total supply destruction. The idea that we're just tugging on the supply demand levers to drive, accelerate price and price floor to reduce the risk of the asset while increasing the return profile. And I'll give you a few examples. I won't show all the juice because it'll take us a while. But first and foremost, MCG. Okay, you guys have your index live. You got 10,000 community members, and they're all interested in all the projects you bring to market. Now, the first way you can increase your yield through this terminal is clicking the Pantheon here. This is actually an ICO platform. So if we look at Launchpads, right, the first thing they ask any project is, okay, how many followers do you have, and which creators are you working with? If you're not working with creators, they say you have to, and they introduce you to some, or they ask you to go get your own because they need hype. Now, the question is, if Launchpads need creators in the first instance, why do we need Launchpads if we already have creators? And that's what we've done, right? Because Launchpads are really just a single venue that has a group of investors keen to invest, but that's exactly what creators are already. So what we've done is we've turned creators into ICO platforms. So you guys can run, so you could partner up with like 3 or 4 other guys, other creators that have a nice big audience, and together you guys bring tokens to market. And instead of charging all these upfront predatory fees and all these pointless AMAs that really just rely on creators anyway, you just say, hey guys, give us 1 to 2% of your token supply, go straight into our vault, vested over 24 months. Now your vault, your yield's gone up, your vault value's gone up, your index value's gone up, a bit of the supply shrunk, and your community got access to a new project at pre-market rates. So that's obviously huge for them. Now, the same applies to creators. So you guys could be like the top dogs on the Solana ICM sector, and you guys can launch creators underneath you. So, hey, guys, we'll give you exposure to our audience, but all you want is 1-2% of your tokens to go into our vault. Now you guys are like a master proxy investment vehicle for every other ICM project and creator in the space. Your coin will just skyrocket then, right? Because now you're getting a percentage of the efforts of all these other projects and all these other people. Now, as for the BD side, we've optimized that too. Everyone knows how frustrating it is for businesses and KOLs to connect and then negotiate. Businesses just have a portal. They log in here and they just publish what they're looking for. Hey, we want the top ICM guys with at least 10,000 followers. We'll pay $5,000 per head. And it just gets broadcast to all creators. Now, all you guys have to do is click accept. The money goes straight into your vault, and you guys publish the... Cool. Super simple. And this is just one of the ideas. So this is just a billboard. So this particular one is exactly what's printed here will automatically post to your profile if you want to just do that. This one's structured. So it won't automatically post. You have to approve and all that jazz. Money's held in escrow. So that's just 2 of the ways it simplifies all of it. So now you guys can just promote, and boom, $50,000 of USDC is just flooding your vault. And when you got USDC flooding your vault, that helps your bear market. That helps you during the bear market, right? Because now you become a real yield generating vessel. Same with tokens. Okay, so that's just a couple of them. Now, if you guys want to launch another token on a different chain, you can too. And again, that goes automatically into your vault. You can decide where it's split, liquid vault. You can monetize your own BD funnel. So if you got people that want to be introduced to other projects, everything, once your token's imported to this terminal, everything's priced in your token. And it's all designed to, again, shrink supply or increase yield. So you can now monetize your network. You can auto route deals, deal flow between Liquid and Vault. You can launch an NFT collection for your community, exclusive merch, AMA access. You can have community access rules, so burn 1,000 tokens or stake 5,000 tokens. You can now launch digital products, simple as writing the name, pricing in your tokens, service, and explaining what it is. So like one-on-one strategy sessions, exclusive Telegram access, anything you can think of that's going to benefit the community or other businesses, you can do here, and it all is designed to burn your token supply. Then there's liquidity. There's a bunch of other things, airdrops and stuff, but like I could go on for hours here. The main point is it's all designed to just totally increase the value of your token while burning as much of the supply as possible. And people can like go on and on about all their cool ideas and narratives around why their business one day will be successful. But the fact is, it all comes down to supply and demand, right? As long as you got more demand than supply, your token's going to go up. And what we do is just crank that lever as hard as possible to like reduce supply and drive demand. Simple.
Got it. And so this index token that's connected to the overall index, as you as a creator using MCG as an example, that also changes in price. So essentially users can also speculate on the price of an index token based on the level of influence of the creator.
Yeah, oh man, it gets crazy there. So we were talking about the speculative value before, right? So think about all these different valuation metrics. One is the price to earnings ratio of your yield. Two is the composition of those index, as in, okay, there's 100 different assets in here, and then they start investigating each individual one to figure out which one's going to go really big, because that would change the total value plus the total yield distribution value. Right. So if some of these projects go bullish, then wow, if you guys have curated it nicely. Then there's also your influence. As you guys swell, so does your deal flow and influence and access to more projects. As you guys like move, you can make different moves, like ship into different ecosystems, jump on a new like concept like robotics, make some new breakout there. All of this changes the speculative value of your token.
Got it. And you said that creators on the platform would also earn the trading fees on their index token.
Correct.
So how are you guys generating revenue from all this? What's in it for you guys at this point?
Yeah, exactly. So that's why it's a win-win-win, right? We're just a fee. We're just like an exchange. So the more successful you guys are, the more fees we generate. Simple.
And what's the fee breakdown there?
So it's basically 5% of everything you see.
Got it.
Not the trading fees though. The trading fees just point. Obviously, it's just a few bips.
Got it. Cool. Dom, any questions?
Yeah, I think the next thing would be, what does the conversations with Launchpads look like? I think if you took this to Launchpads and then they maybe shared some of their top creators with you guys, what does that look like? Is there a way you could integrate this into, I don't know, call it SOAR, call it Believe, call it MetaDAO, whatever, the big Launchpad is? Is there a way that this terminal can just be natively integrated there so that these projects can funnel their launches through here, and then the
Yeah,
creators can
exactly.
also...
100%. So we don't actually want to compete in the launchpad space. We're all about post-market, right? We just want to help projects perform better and creators swell their earnings for the community. So yeah, we integrate perfectly with launchpads. They can import their tokens, so they can have their big successful ICO, and then that company can actually import their token into our terminal. Also, obviously, take advantage of our creator indices by getting long-term creator support without the sell pressure. So that's the space we want to live in.
How those conversations been looking, and have you been having them, or what does that look like?
Yeah, so our BD we haven't started with launchpads, but we're going to in a minute. Probably start in the next couple of weeks, to be honest. But we've been focused mainly on the foundation side. We want to work, so we're getting the sign off from the larger ecosystem chains first, top down approach. Hey, these guys have looked at us. They understand we're legit. They're providing deal flow and introductions to the best project, because it's all about finding the best, right? We want the best projects that have real longevity baked into their business model.
Yeah.
So we started there first.
Makes sense. Maybe, what about tokenomics? Are you guys going to have your own token or your own index? How's that look?
Yeah, so we are going to have our own token. This eventually has to be totally permissionless, and I'm a guy that believes in the whole decentralization spectrum. I'm a full-on wannabe cypherpunk, so eventually I want the community to dictate everything. But obviously, growing pains, right? You don't want to start there. But first and foremost, we're not launching a token yet. I want to go live, prove this whole revenue model scales, and get our first few creators up to decent valuations first.
Where do you or I should say, when do you guys see yourself going live with this? I know you might not want to get into specifics, but as much as you can.
Oh yeah, we're going live in the next couple of weeks. We've already got so we've got about 20 something creators now who have submitted to. We're curating our first 20 creators. Like I said, we want to make sure they're the top. And we want to cover all ecosystems first, but yeah, our first 6 are definitely locked in. Starting off small, really humble valuations, but a lot of them already have like a lot of yield already generated. they've just gone back. So if you imagine for projects, right, as soon as you say, hey, I'll support you guys for 24 months, it's not going to cost you $1. You just have to give me some tokens, and they're vested over a 24-month period. Projects just sort of jump at that. So these creators that we're working with, they're already talking to projects, they're already getting the yield. So when they go live, they're already a yield positive asset. So that goes live next couple of weeks. All we're waiting on is we have distribution partners now. So not only have we built the product, but we're actually building the distribution network to make sure that all the projects that have the opportunity to can scale through larger investors, larger distribution channels, trading groups, and those sort of things. So we're just aligning everyone there to make sure that we've got like our little AMA circuit, our visibility circuit, and then our distribution and trading vehicle too.
Have you guys talked to like liquid funds that might want to launch something like this, like a broader base index that's available to everyone?
No, we haven't yet, but it's a very good point. And should like our BD's really been like it's pretty busy. You know what it's like to just book in your schedule, your calendar these days. And because we're a brand new primitive, it takes a little bit of education first. And honestly, a lot of the projects we talk to, they love it, but they think, well, where's the catch? It's a scam. Like how do I get these creators for 24 months when most creators ask for $10,000 for a single post, you know? So it's just helping them understand the values systems for each actor. Once they understand that, they're like, oh, okay, I get it. They get to monetize through their own token by leveraging my token for yield. Simple.
I guess that's the biggest struggle, right? It's proving out this new structure and having people get on board. Once you can go from 0 to 1, I think that's like the hard part's maybe behind you.
Yeah, absolutely.
So tell us a little bit about the team. I know you mentioned it's just kind of you and some of your partners. Like, you know, what's the makeup of the team right now? How big are you guys?
Yeah, so well, we've got 5 in the core development team. We have and everyone else that oversees it, they're all senior level people that oversee on a contract basis. So the idea is to keep it as light, as lean as possible, and then just bring in full teams when we need to do certain sprints. But our BD is the most important thing. So, you know, we've got Tony Ansell from, I don't know if you guys know, like Anthony Scaramucci and stuff from Cointelegraph.
You got Scaramucci on there. No way. Okay.
He's my man, dude. He's just awesome, man. He's a top guy. Mizzy's our creative director. I'm not sure if you know Oaks Mizzy. Mizzy's World from Catalyst OG. He's our creative guy. I'm just trying to name names that you guys would know. We've got Jonathan from Mave. He's also a PR specialist. And most of us are focused on BD, business growth. Our core development team, we've got Brian, who oversees he's the CTO, and he's from French Finance. Total genius. And we've also got his son, Alex, total genius again on smart contracts and blockchain. My background's obviously the economic architecture and tokenomics. That's where I add value. And the rest are contractors.
Wow,
nice.
Seems like quite the team.
And this is Anthony Scaramucci, like former White House communications director Scaramucci, right?
No, from Cointelegraph.
I must have got that. Okay, got it. I'm like, I wanted to clarify that. I'm like, is that the same guy I'm thinking about? Okay. Okay, cool. I'm glad I clarified. Okay, cool. Well, I think we got a ton of information. This was an excellent presentation, excellent product. Like I mentioned at the start of this interview, it's something that we've never seen before, and I think it aligns incentives in such a way that helps just the industry to grow in a much more sustainable way, especially with how much saturation there is with tokens on the market. So again, love the product, love what you guys are doing. Excited to see you guys see what you guys build as you go live over the next few weeks. But as we wrap here, any closing thoughts, anything you want to leave the folks with, anything you want to say to get them excited?
No, I just think we should be excited about the shift in behaviors and the mindset now. Everything's sort of converging back to value, right? And something like this is just really important for the space. I guarantee a lot of projects are going to sort of copy some of our model because it just makes a lot of sense. And honestly, I'm all for it because it just improves the whole ecosystem, right? Sick of seeing 99.998% failure rate. It's ridiculous.
Absolutely. Well, we appreciate you coming on as always. We are excited to watch you guys make it happen. So we'll keep in contact, and best of luck to you.
Thanks, guys. Pleasure.
Appreciate
Thanks for having me.
Paul. Take care. Of course.
See you guys.
Awesome.
Huge. Takeaways.
Yeah, the truth is, so many projects need this sort of marketing initial boost, bootstrapping, if you want to call it that. And this is a nice way to connect them with the people that are going to get them the most attention that actually matters, real valuable attention rather than just paying for some KOL marketing team that's going to have no impact. And the truth is that it just has to be tasteful, right? Hypothetically, if MCG did something like this, I'm sure we get a lot of deals thrown at our face. And, you have to be very cherry picking about who you accept and making sure you start taking deals that are actually value additive rather than shilly and whatnot. So, there's lots of angles to it. I would love to see this setup, the back end setup, at least be integrated more into current launch pads, right?
Yeah.
For example, we know people come to us. We sometimes go to people about, hey, we'd love to highlight your project and whatnot. If there was something where we could just go into an app, they could pick and choose who they want to help promote their stuff. We could pick and choose who we want to promote. I would love to see that for every platform. So I do see the value there.
Yeah. And I mean, I think for us, I don't know, like we don't do I mean, we got some sponsors of the show and stuff, but we don't do a ton of promo on our show. And same thing with myself. I don't do a ton of promo on my my personal account or anything. It's mostly just like stuff that that we're interested that we cover here on MCG and on my personal. But for those that like have like that that super active deal flow, I mean, there's a ton of people that come to me for like my DMs are filled with stuff, right? Like as is anyone, if you have a follower count out there, they have tons of just garbage projects coming at them with whatever offer. But I think this is a really good way of aligning incentives in such a way that it kind of creates like, let's say we have like a ton of KOLs, like it creates scarcity, right? And like it incentivizes KOLs in the space to operate in a much different way. Like what I used to see, especially in the ETH days, is like, these KOLs, bro, like they'd all just, just the same age old thing. You take supply, you dump it on your audience, right? And in this case, instead of dumping on the audience, you're actually like giving the audience the upside and exposure to what you're covering. So I think it definitely does change the game in a fundamental way. I agree with you. I want to see it in launch pads. I think that would be the best way to do it. But I'm excited to see like how this is used, because I'm assuming if you're just like accepting like, every project, for example, that comes your way, that's going to affect the performance of your indice, right? Like if
It's
project
interesting
goes to zero.
because you'll get value added to your treasury, but then you're promoting terrible stuff. So like the value of your promotion kind of goes down, but the value of your treasury goes up. Although the treasury is temporarily going up because it's likely if you're promoting trash, it's just going to nuke over the 24 months it's vested. So,
but that's the other thing. Like it's like you have to think about it's 24 months. Like you have to think about how can this project that I'm working with, can it survive for 24 months? And I think that's kind of a bigger question, not only for just but just really any project building in crypto. I mean, which project have we known that has built for 24 months straight, right? Like all the projects that some of the ones that we're bullish on right now, they kind of recently launched this year. So I would love to see them kind of also do a different investing schedule, maybe like 12 to 24 months, depending on that, because obviously 2 years is, I mean, I don't know. I mean, if you invested, 2 years ago in Ethereum, for example, like you'd be at the same, there'd be no yield essentially on something like that. So yeah, like I'm interested to see like how this plays out, what projects actually can commit to building for 24 months.
but that's what we want, really, right? We want projects that are going to be here for the long term. So yeah, maybe there could be some fluctuation, but interesting nonetheless. I do know a project that's going to be building for 24 months. And on that note, I'll pull them up because we have them coming up Friday. So just wanted to get a little clip segment. And we can wrap this shortly because market's down 4.5%. Bitcoin is down. Markets are scared. That being said, we got Viva coming on Friday. We have Moby before that. But let's talk about a bit about Viva. They're actually right now live on a Von Doom call. But Viva has seen some interesting metrics over the last couple days and weeks. We've seen their holder count grow pretty significantly. I'm not sure if it shows it on here. This is a Pantheon terminal. But Viva has grown its holders up to 3,500 now. If you remember, that was only at 1,500 maybe a month ago. So holder count's
I can
growing.
share my screen too.
Yeah, go ahead. Holder count's growing, and I would attribute that to the rollout that they've been working on, right? Their wallet that they've implemented, their in-app wallet, and recently you can see they've started training. They've got thousands of employees. They've started training over their 1,000 employees to go and educate on Viva and the uses of it, and how they're going to implement it at their 60,000 plus points of sale and what's going on now. So in this picture here, you can see that that's what's going on. It's a training session for the employees who are going to start evangelizing for Viva shortly. So pretty cool stuff there. I'm not
Yeah,
sure
and
what you want to pull up.
I'll share my screen too, like just kind of going over the holder growth. You see just, from just a few days ago, just how it's been just going up only, right? In the last 7 days, holders are up, 40%. Meanwhile, when you look at the price of Viva, if I can pull it up here, I think I have to go back to the dashboard. But when you look at the price of Viva, it's actually still relatively in the buy zone that we normally would cover. I can pull this up here real quick. I can pull it up on Moby here in a second, but you see like holders are going up, but the price is relatively still in that buy zone that we've always been talking about. So again, just supply demand dynamics are shifting here. That's going to be notable in the price very soon, and that's why it's still in this buy zone as you see we've marked out here.
Yeah, on that note too, and I'll pull back my screen. We've seen plenty of significant updates, and I'm sure more are on the way. And I got to go listen back to this Von Doom space that's going on. But here's one, right? Viva Wallet onboarding is now live. Over 3 million Viva app users can now onboard through their proprietary but living KYC system that instantly purchases Viva on the open market using local Bob currency. This unlocks the next stage of compliant nationwide adoption at scale. Although the wallet is live for everyone, we're rolling out exclusive promotions to the family and friends of our 1,000 plus employees to spark early momentum and stress test the wallet before open our ad exchange floodgates of our ads to all app users. So we're about to get to that point, right? We're testing it out now. We have the 1,000 employees going through they have special incentives, and they're going through the learning process now to really be able to evangelize. And once that kicks in and once it's working, the ad exchange floodgates will open up and all users will be advertised the new Viva wallet and what Viva can do for them. So,
man, we just went through the top 100. Who's doing it like this? We just went through the top 100. Who's doing it like this, man?
Definitely not Litecoin. Definitely not Ethereum Classic. That's for sure. All Viva wallet buys go straight to a 48-hour flex staking with a massive 20% APY. So again, anyone that goes and buys Viva through the Viva app wallet gets instantly entered into a 48-hour flex staking mechanism, which is getting them 20% APY. To garner this APY, it's bought off the open market from the Viva team, right? So there's real value accrual there.
20%. That's nice.
It is nice. It's very nice, Chill.
That's way more than you get in the savings account. That's for sure. Here in the U.S.
In Bolivia, it's also, your value amount has some sustainability there. So yeah, wallet's officially live, new UX and UI. You can go click on here to check it out. And I'll show you guys too. There's some tidbits here. If you guys actually want to go through, you can see some pretty interesting things. So here's kind of what the app, you can go and download it. You can see you can convert here, you can refer, you can earn. There's different ways. If you look at all these, there's different demo videos attached to each one, how you can do it. Nice and easy, simple setup. Again, this is going live to 1 million plus users shortly. So there's a quick little update on Viva. Nothing crazy as always. We love them. They're supporters of the show. So we're happy to have them as sponsors. And again, one of our favorite projects, genuinely outside of just having this working relationship with them. Truly a great product. So,
I mean, the reason for the working relationship is because we've been covering Viva for pretty much since its launch. At least me personally, anyway. I remember fighting off FUD because people thought they were, because people they said, "Oh no, they're not a $1 billion company." Well, they are multi-billion at that. So yeah, you're welcome. But yeah, we love Viva here. Love what they're doing, and looking forward to that interview there on Friday.
Maybe we'll wrap with a Vici and Solo chart. Obviously we have Pepe here. He said, "Could we see Solo doing an Avicii?" And he means we'll pull up the Avicii chart. Basically launching, having a little dip, and just like straight, you know, printing over time. We can see this is slow cooking. So can Solo do a slow cook like Avicii? I think we need more metrics, right? We know, like Avicii, Solo's been out for a year prior to launching. They have TVL, they have users. The question is, how can they scale? We saw Avicii scaled really well in their first month. They had great growth metrics. If Solo can do that and prove that, I think we have a bet here. It's easier to implement Avicii's cards and systems than it is for Solo, I think, right? Because stablecoin adoption is difficult. You have to get a few people on board for momentum to really start. You know, getting a crypto card, it's a little easier to adopt. So it might be a little more difficult for Solo starting off, but I am excited for what they're going to cook up. So
yeah,
this is the Avicii chart.
1000%. This is the Avicii chart. Just a quick note on Avicii chart, by the way. Last time we talked about it, it was literally at all-time highs over here. And I was like, well, look, we've been going up only. Markets look shaky. So, you know, we could see this kind of stall out because it's gone up over, I think it was 14x was what we covered from launch. So let me just see here. Yeah, it's gone up. Yeah, like nearly like 10x since launch, maybe even a little bit more than that. And it's, yeah, so almost 14x, like we said, about 13, 14x. And it's been up only. So kind of stalled out a little bit here. Some profit takers, some distribution happening here, especially as markets are choppy. So we see that chart still looks absolutely strong, hasn't pulled back nearly as much as most other stuff on the market. So can we see Solo replicate something like that? Maybe. I think, again, like Dom said, I think the market needs a little bit more. I think the markets need a little bit more to go on with Solo. It's a great project. It absolutely is. But you know what drives the price a lot of times is the narrative, the storytelling, the metrics. You know, Avicii had a lot of that. So we'll see what they come out with, but I have no doubt that this will do very well over time.
No, Solo is slightly above ICO price. So I think 0.8 was the ICO price. This is at 0.88. So for 8% more, you could get in. ICO is up, you know, or less than 8%, but a little bit from ICO now. So you guys could, you know, get a pretty decent entry here. We are trading sideways. Current market conditions are terrible. Maybe we dip under ICO for a bit. I don't know. Some lore on the Solo situation, though. Actually, I guess the Solo dev's brother is an employee at OpenAI, right? He works for OpenAI to some capacity. So people thought that was some pretty cool lore. I guess their family's just deeply entrenched in this technology and pretty cool stuff. So Solo's cool. Watching very closely. That's for sure.
Yeah, absolutely. I'm gonna go ahead and mark off this ICO price on this here, and let's actually,
if you go to coordinates too, you can put that at 0.8000 flat if you want to get it real accurate. Yeah. Boom.
Bang. Look at Dom with the alpha.
Yeah, looking good. Ave says Orgo is looking very good after recent updates.
Yes.
I'm gonna pull up Orgo.
Orgo is bouncing very nicely.
This one shocked me. Did you see the news?
No. Oh yes, that they're migrating away. Yeah, I didn't think that was. I was actually interested to see like what's going to happen around that. Actually, for me, it speaks a lot to what more that says more about Believe than it does Orgo.
Yeah.
But yeah, I saw the announcement. Here it is. Bang.
And why that's meaningful, guys, is Spencer and Pasternak have a like long-standing relationship. Pasternak's actually an angel investor or seed investor in Orgo. So it's like for them to say, hey, we're migrating off Believe. That was like the last ditch. We were thinking, hey, it's gonna be Believe in Orgo. Orgo's gonna Believe's gonna have Orgo. That's what's gonna stand left. They're migrating. That's pretty crazy.
Yep. Yep. So that's the announcement. We'll release a full article soon, they said. So still more information to come on that. But yeah, like I was also really surprised by this move. But nice little dip buy here. Nice little dip buy
Good
here.
reaction.
Honestly, this is 50% circulating. So this is still under 4 mil, if we're being honest. So this is still pretty cheap relative to what's being offered. Shout out to Rambo as well. I think Rambo put out a nice thread on this. That's the homie Rambo XBT.
Let's go.
He put out a really nice thread on Orgo, and it is right here, the Orgo pill thread. We don't have to go through it, but I think it's just really awesome thread, really good breakdown. If you guys want that, you can check out Rambo_XBT. Shout out the homie. And this is the thread here, the Orgo pill thread. Orgo makes businesses exponentially more productive. So again, don't need to go through it, but just wanted to show this to you guys because it's a really good read if you're not familiar. But we've gone over Orgo so many times on this show. So yeah. Outside of that, we saw Orgo, we saw Avicii.
What about CPT? You've written some threads up. They've been pretty active on Twitter recently. Patrick's been active. I think they published some threads and whatnot. So
yeah,
they're holding up very nicely.
Let's see what's I think the 4 hour gives me a little bit more. Let's see what they're working with here. CPT looks good, and let me see. Bang, bang. All right, cool. Yeah, CPT looks pretty good. It's still in this range that it's formed here. And I basically said the last time we looked at this chart, it was basically in the same spot. And I was like, man, like, I don't really know what to make of it. It's just kind of in the middle, just consolidating. I'm sure that they're going to have some more updates. We've seen the team. I think I saw Patrick on the timeline. Yeah. He's actually been putting out some nice written content about that. I think they just came out with one today. Here he says, wireless power transfer is already being implemented worldwide. The market is only going to get bigger. The US, Japan, and others are already pushing these solutions into their nation's infrastructure. Contactless power is the next step from wireless. No physical contact, ambient energy. I don't know if you guys are seeing this, but if you notice, he says that governments are making the shift, right? And on our first stream, they also said they already have interest from governments, right? So just start kind of picking up what they're putting down.
That's like that's. And again, yesterday we talked about how they were literally in conversations with a NASDAQ listed company. If you saw Patrick's other post, I commented on recently, like that manufacturer that they're looking at is a NASDAQ listed company. They made hundreds of millions of dollars. Maybe was it? I forgot the exact number Josh mentioned on their Wikipedia, but they made a ton of money this last year. So like, incredible.
Can we find that?
Is it not on his main?
I can go to your page, go to your replies.
Yeah, I'm not very active these days. Down. There we go.
Massimo is a NASDAQ traded company, by the way. So Patrick says, business is like life 24/7. We never stop, even during weekends. Starting our tech production to scale requires the right manufacturing partner. So I flew to New Hampshire over the next weekend to meet a team who will help us build some core components. Excited for what is ahead. Yeah, that's actually pretty huge. And just so you guys can see this, let me see here. I'm gonna shift over to good old Google. As you can see here, market cap of this is 7.5 billion.
Oh, and they had a nasty run up too, bro. They ripped over.
Let's
Yeah.
let's
You're gonna
look
have to
at
go to
Max.
Max, yeah.
Jesus.
So we were talking the other day. They got through the great financial crisis, or GFC. Took a couple of years to get through that. It was in 2007, and it seems like right when they got out, most companies took about 7 years past that. So 2014, 2015, 2016, they started scaling up, and then peaked out at 2022, towards the tail end of COVID. Just absolutely massive company.
So again, all of I love the fact that they're coming out with more information, just more tweets, more updates. It just kind of gives us a little bit more to go on as far as trying to see what's coming up next. But love to see it. Multi-billion-dollar company, and I believe Dom even brought out this. I saw a tweet from yours that brought out this plaque here that says 1 billion devices manufactured from 2012 to 2024. So again,
At
there's
$1 a device, that's over $1 billion. Okay, revenue. I would imagine they're putting out devices worth more than $1. So that says a lot.
That's crazy. That's crazy. Yeah, and the article that he brought out was actually coming from the World Economic Forum just a little over a week ago, and basically it just talked about how wireless power technologies, they're kind of getting integrated into other parts of the world. So governments are now looking at it. And there's a part of this article as well here that talked about expanding wireless power in Japan. Companies such
Patrick
as
mentioned.
Aderlink have demonstrated integration of wireless power into the sensors of robotic arms in manufacturing and building management systems. So there's obviously a demand for this in many practical, but more so even industrial use cases. And we saw, and Patrick already told us on our first stream, he said they're focused on more so the industrial side. They'll get to the consumer side later. I think the consumer side, that's where they IPO and they go crazy. And that's where this becomes, a multi-trillion-dollar opportunity. But this is where it starts laying the groundwork on the industrial side for the use case of this.
What's interesting about CPT is like we see the FDV right now is 22 million, right? I think, or maybe 21 million, 1.8, 1.9 million market cap. And the truly interesting part about CPT is they're so well positioned. They've got a founder that's taking companies to over billions of dollars, listed on the NASDAQ. They're partnering with billion-dollar companies. I think this is one of those things that goes from zero, just sits for a while, to they announce one big thing and it just pops, it just rips. And the truth is, like, they're positioned so well in such a growth market, it can be very difficult to value something like this. Again, I remain bullish on CPT. I think seeing these valuations is probably a gift.
So, in other words, it pulls a this.
Yeah, hopefully just not that long.
Yeah, that part. And that kind of got me thinking, just for SOAR projects in general. We know the ultimate catalyst is a liquidity event, IPO, merger acquisition. But in the short term, other catalysts could be, looking at something like CPT, for example, could be, what manufacturers are they partnering with? Like stuff like what Patrick mentioned here, like the semiconductor Massimo. That's a catalyst, a proof of concept, if you will. The other proof of concept would be who starts investing in these things. Like when we actually get liquid token funds, we get VCs on board. We see Paradigm bidding MetaDAO. So when we actually start getting some investments from some fresh capital, I think that's when things actually start to heat up for SOAR tokens in general. There was another project I wanted to talk about a little bit. Newer project, something different than what we've seen. But if you guys were on the stream yesterday, I put it in the comment section of yesterday's stream, and I was like, whoa, because I looked at this and I'm like, this is actually a crazy opportunity. Let me pivot over to my Typefully. Y'all are gonna get, I don't even know if I'm gonna post this thread or not, but y'all are gonna get the inside scoop on this thread. But basically, this is the chart here. ZKSL. Now, chart looks terrible. It also has ZK in it, which makes it look really LARPy. It makes it look like a freaking scam. And when I first saw this project, I actually didn't see the chart. I just saw, I read about what they were talking about. I was like, oh, wow, let me look at this chart, because I remember seeing some people on the timeline talk about it. Now, apparently what this is actually pretty huge. I'm gonna pivot to their website, because I think they lay it out so well on their website. So on their website, you see they have a general overview, but they have a general white paper, an investor white paper, and a technical white paper. So essentially what ZK C level is, and C level is referring to some very deep technical aspects of the Solana blockchain. But what ZKC level is, it basically unlocks validators, the opportunity to be a Solana validator. And let me just kind of go through this with you guys real quick, because I think this is something I haven't seen like ever. Like I've seen it for Ethereum, but haven't seen it for Solana. And I'll zoom in on this. Maybe you guys can't see it, so I'll zoom in here. Bang. So ZKSL, basically they solve a huge opportunity, but they could unlock the true potential of Solana and push it towards decentralization. So to understand ZKSL, you have to understand the problem. So the problem is, every blockchain needs validators. Solana especially, it actually, it's alive because of its validators. They secure the blockchain. They help keep its performance up, all that good stuff. Another thing that validators do is decentralize the blockchain. Now, the thing with being a Solana validator is it's extremely expensive. Annual costs exceed $34 million to run a validator. And so because validators, as Solana scales, as it grows as a chain, the cost to become a validator also continues to go up. And so because those costs go up, the centralization risks with validators for Solana also goes up. So overall, it's just a bad look on Solana. Oftentimes these centralization metrics impact institutional investment. And so far we've seen Solana's validator count go from 2,500 in 2023 down to under 900 in 2025. So again, more centralization risks that's continuing to increase as time goes on. Now, this is kind of where ZKSL kind of comes in with a solution. Essentially, they introduced code that could validate or confirm that they have a solution that could basically reduce validator costs by 99.9%. And these claims are, this is what the team claims, right? But essentially they're using ZK start proofs to reduce the cost of being a validator up from $34 million plus a year down to something way more manageable, like 5,000 to 10,000. So that's kind of what this aims to solve. Now, basically, this whole kind of downtrend that you see on the chart that happened over here, apparently they delayed the release of some commits on GitHub. I guess GitHub is basically like where they're showing that they can prove, where they're proving that they actually have the expertise to do something like this. The team is anon. That's a big, that was a big red flag for me, to be honest. But when I looked at the GitHub, I actually used ChatGPT because obviously I'm a smooth brain degen, so I don't really know what the code that I'm looking at. But I used ChatGPT to kind of help me verify some of the code. And basically, ChatGPT said this: yes, the GitHub shows a very reasonable level of competence. The team seems to know what they're doing. They picked appropriate languages, they put in tests, they have a solid design, and they are not just speculating. They have code. So based on what we see from the GitHub, they basically have proved that, hey, we have the technical know-how to solve this problem. It's all about implementation at a certain point. So basically, if you're valuing this project, you're valuing it based on what you see in the GitHub. I'm not finished with this thread. Again, I'm not even sure if I'm ever going to even post this on Twitter. But you know, one thing that ChatGPT said is that, you know, don't expect that this solution to go live tomorrow, right? Like there's still some headway, some room, some room to grow on this. But for me, the part that really sticks out is this is a massive problem for Solana. Again, like I mentioned earlier, it affects institutional investment. It affects adoption of the Solana blockchain, and so if Solana wants to fix this, they're incentivized to get behind this, as it's a serious positive impact on the network. So I'm dipping my toes in here. I'm dipping my toes in here. You know, again, not really a solution that's going to be available straight up tomorrow. But this is a huge problem that Solana faces, and if they want to further decentralize their blockchain, if they want more people to become validators, it'll be through this technology. And basically, the way the token comes into play is you stake the tokens to access, you know, computation and to be able to validate on the Solana network. So very interesting project. Figured I'd just bring it to you guys. You know, basically you stake the tokens to validate, earn fees, and vote on the on you know, blocks and all that good stuff. So figured I'd share that with you all. Ave, a dope man, appreciate you. ICM is something I'll be adding here while we are in this market condition. Yeah, I think ICM is actually at a pretty
Great level.
Great level. Yeah, I think
Probably-
last time I checked,
Probably
it was
not the worst idea, Ave.
It was under 5. It was under 5 mil the last time I checked. Yeah. So looks like ICM is in like
good markets, man. Like we know what we want to be positioned in. Again, it's like a situation of being early can often feel like being wrong. That's the truth. And in this case, we are early. We're early ICM. It might feel like we're late ICM or ICM's over, but we're very early ICM. All it's going to take now is macro shift. And if macro shift, ICM is the narrative that picks up. And again, ICM really now just stands for broader utility. It's just with more deep integrations of tokens or revenue buybacks or ownership, right? That is what ICM is. And the truth is, we are extremely early right now. Whether we're early by a month, whether we're early by a year, I'm not exactly sure. But, you know, just accumulate, as A King says. And that's the truth. We're just going to accumulate and wait till that kicks in. So
that's it.
Buy strong projects. We've
That's
seen them
it.
all. We've seen them all on this show. We've talked to them all on the show. You should know by now which ones are good, which ones aren't. You know what we continue to talk about. It couldn't be more obvious. A lot of the projects we talked about are rooted in fundamentals like ICM. We know ICM itself will have a value accrual back to the token and a value accrual back to holders, right? That's a very big thing. We know they have white gloved, very specific, very top tier projects. We know that they're going to basically be getting revenue from referrals for all these projects for whatever launch pad they send them to. And so there's a lot of value for holders at 5 mil. Can you justify that value? I'd say so.
Literally. So, yeah, tons of stuff happening out there. You know, I'll end on this. We can wrap this here, but I put out a tweet recently, not that tweet. This one, that basically says some microcap utility projects on Solana are looking solid from a PA and FA perspective. MetaDAO launches continue to slow cook. Some base players are showing serious strength. Shout out to EDEL. I meant to put in this as well. ICM projects are also in deep buy zones, but there's still trades to take, right? There's still value that you can look at in this market. And look, BTC is doing its thing, but we will do ours, and that's accumulate. So shout out to a King's mentality.
Yep. And again, I actually do think generally for those accumulating the projects we picked, and, you know, I wish I was saying this the opposite way. I wish I was saying, yo, you guys have been picking the projects we're talking about. We're all going up only. We're going to Valhalla. But that's not the case, obviously. But generally, if you're holding the stuff we've talked about, you're actually outperforming Bitcoin right now significantly. Bitcoin's, again, down 4.5% today. Most of my on-chain bags are not, which is interesting. Again, and I think, which it even shows when Bitcoin finds a bottom, whether that's bottom and trend sideways for a while, whether that's bottom and starts pumping for a while, I think our coins will start getting bids, because right now It's not about supply. The holders are basically running low on ammunition. It's all about when we get a break from the chaos and the pain, I think is when we actually start seeing some sort of bounce, at least a dead cat bounce on our back. So guys, keep your heads up. We'll be here every day, no matter what. And we appreciate you guys coming on. Peace.
GG, boys.